Sense of direction, I would argue, maybe from European equities this morning, a little softer. Be interesting to see how the miners, though, trade on the back of what we're seeing out of China this morning. Those markets have been very strong into the Chinese close today. The IBEX is down by 0.3, the DAX is down by 0.2, the CAC is down by 0.2. I would say in aggregate, we're a little softer, Critty, but not by much. What's happening under the hood?
Softer broadly, but the outperformance is exactly what you just pointed out. The China story already showing up at the open in the UK. So the UK is indeed broadly lower, but your best performers, your index contributors to the upside are Glencore, Rio Tinto, Anglo American, BP. Anna, what do those have in common? There are the major commodity names taking their cue from China. The rest of the market, though, not enjoying that same love.
Yes, absolutely. And we saw in the China session, we saw a real surge in Chinese assets towards the close, didn't we? And whether you're looking at Chinese stocks specifically, the Hong Kong market, the Chinese tech market, all of that looking really strong as we head towards the end of the trading day there and the end of the trading week. And it seems, as we were hearing from Paul Dobson, a little bit of a reset from the PBOC, or some extra love from the PBOC being jumped on by investors in China, and some of that flowing through into Europe, as you say, with basic resources going higher. To your point, Guy, we do see some underperformance quite evident now then in the London market as things start to settle down. So there's miners going higher, but other things not necessarily so, and the FTSE 100 down by 0.4%.
It's really hard to read this China story, though, isn't it? Would the Chinese have been better to have done a kind of all-in-one announcement rather than this drip feed? Does the sum of the parts of the single announcements, the kind of smaller announcements, amount to the same thing as a one big announcement?
I wonder if it was planned as an all-in-one, and then they didn't see quite the sustained positivity they hoped for, and then we get this drip feed of extra press conferences.
Yeah, it's a fascinating one. And we talked about how it's showing up in the commodity sector. It's showing up in the others as well. Just take a look at your biggest volume movers this morning showing up on that screen there. Showing up in the French market as well. The luxury names that were taking such a beating earlier this week, now actually getting a little bit of love. Processes up there as well. But LVMH, ASML, your heavyweights, which of course are very much China exposed, also driving the upside.
Yes, and that's the Tencent holding in Process, isn't it? Pushing that one higher. So that's up by 3.3% as a result of what we're seeing through the Chinese session. So a direct read across there, and that lifting the AEX.
Let's talk a little bit about what this all means for the Chinese economy, and therefore, by extension, you could argue, the European economy. If I listen to Christine Lagarde, the signal doesn't sound so great right now. Let's take a listen to what she had to say yesterday.
Economic activity has been somewhat weaker than expected. While industrial production has been particularly volatile over the summer months, surveys indicate that manufacturing has continued to contract. For services, surveys show an uptick in August, likely supported by a strong summer tourism season, but the latest data point to more sluggish growth.
ECB President Christine Lagarde speaking yesterday at the ECB meeting in Slovenia about the ongoing weak economic activity in the euro area. Let's get a little bit more perspective here. Joining us now is Greg Peters, co-CIO over at PGIM Fixed Income. Pleasure to have you at the program. Welcome to London.
Thank you.
Talk to us a little bit about the marriage of these two stories. We're talking about weakness in Europe, but perhaps a saving grace coming out of China. Is that enough to maybe hold Europe afloat for a little bit? Does that China stimulus have a read-through here, the way the markets are interpreting this morning?
I don't really think so. I think the China story is very much a China story. So the way we're thinking about it, the way I'm thinking about it is, yes, it does cut off that kind of left tail of China really rolling over hard. But if you look at the policies that are being put forth, and it is somewhat of a drip feed, I think they are trying to figure it out as they go along and respond to, market reactions here, but it's internally focused, right? So growing the Chinese economy is not the way that it once was, right? It's not going to have the draw on commodities. It's not going to have the read-through across the global stage. So I think it's a China story and not a global story.
When we talk about that China story or the read-through or lack thereof, though, we're waiting, I think, from a bond market perspective for it to show up in some way, the way it did back in 2009, into the U.S. market as well. And it doesn't feel like we're getting that, to your point, that's an isolated story. But then what is driving this resilience that we're seeing in the U.S. market and the translation in the bond market? I'm looking at a 4.11 on the 10-year yield here. In your view, what's going on in treasuries?
I think it's responding to growth. The interesting aspect about what's going on is that it's so volatile. Right? It's so volatile in the face of inflation coming down, pretty stable growth, and central banks moving policy lower. And so I think there's too much data-driven noise in the marketplace. The bond market has swung way too much. You've seen the 2-year note in just a few months traverse 150 basis points. That is a massive move in the face of very little data or change in data. So I think the market, the bond market, is a little schizophrenic. It's reading too much into every single data print, and there's a bias in the marketplace that any news means more rate cuts. And I'm not sure that's really the environment that we're in.
But you talk about, good morning to you, Greg, you talk about little data or no change in the data. Others have highlighted the strength that we've seen, the resilience in the US data. And I mean, that seems to be the new information that the market is responding to. I think that you think the yields are going to be stable or lower from here. How do you fit that with the resilience that we're seeing in some of the US data?
So the way we're looking at it is that we are in a pretty stable growth environment, and inflation is just around the same level. So if you kind of put those two factors together, that equates to less policy shifts lower, number one. And number two, that should augur yields being kind of stable to higher. The reason why the bond market rallied so much across the curve was not the change in growth, it was the change in pricing of the front end, which was, as I mentioned, a little too schizophrenic. So as soon as that starts to come off the boil, then I think yields will kind of settle in.
Greg, if we take a step back from where we are sort of day-to-day in treasury markets, and we came from a period that some people called secular stagnation, then we saw these generational highs in inflation, really strong inflation impulses in the US and elsewhere. Where are we heading now? What is this period going to be?
I think we're in a very different regime. The post-GFC world is over. The data read, as we mentioned, is really hard to suss out and truly understand. But there's more inflation in the system today. There's productivity gains, seemingly, and response to technology, which is why you're seeing the U.S. equity market do so well. So I think we're in a different world. And that different world means rates are higher, not lower. And I don't think that narrative has truly been absorbed yet. And I think that's what will occur over the course of the next several quarters and several years.
What range do you think the U.S. 10-year is going to trade in next year?
A wide range, which I hate. As a bond investor, you want to get a little more narrow, but I think we're in a range of 3 to 5%. I think it's but it's really contingent on what happens on the policy side. But what's not really being talked about enough is the deficit, right? And so that will be a continued kind of problem.
And that requires a higher term premium.
It does.
By how much?
Well, more. So I won't get into kind of the math of it all.
Getting into the specifics here.
But more, right? So it's just right at its core, supply and demand, right? So the U.S. Treasury has to fund their debt. There's more supply coming, and that increases the term premium, risk premium, and so that all else equal should equate to higher yields, not lower yields. But if you look at the policies in place, that's also more inflationary, not disinflationary. You hear all the stories about supply chains moving, onshoring, nearshoring, friendshoring. That puts friction in the system. That's inflationary, not disinflationary.
How do you trade the deficit at the moment? January 20th, we get a new president. January 10th, we hit the debt ceiling? How do you trade it?
I think you trade it through the curve. I think the way it manifests itself is, once again, going back to the risk-term premium, the shape of the U.S. Treasury curve. Trading deficits is really tricky because it doesn't matter until it matters, right? And so no one really knows that tipping point. It just seems to occur. But I think the way it manifests itself is through inflation and steeper curves.
Does it ever matter in the U.S.?
Well, I think the U.S. has a luxury position in that it's a reserve currency. But, you know, those things change. You know, we're sitting here in London. There was a point in time where the pound was, you know, the same. So you have to be careful. But I do think the U.S. is in a much better position. But what the U.S. has going for it, other than the U.K., is deficits are rising everywhere. So we're kind of hiding behind everywhere else in the world, which actually makes it more problematic, not less.
Sort of safety in numbers.
Do I sell? Talking of numbers, do I sell treasuries if Trump wins the presidency?
I think the tendency will be for yields to go higher, not lower.
So yes.
You can interpret that.
Prices might go down.
You know, but there's a lot to flow through, right? So it depends on what Congress looks like. But the point is, no matter who is president, no matter what the makeup of the House and Senate looks like, deficits are not moving lower.
No.
And that's the story.
You said a range of 3 to 5% in 2025. There is some commentary out there that 6% is on the table. Do you buy it?
It's possible, but what has to happen in that environment is inflation has to move much, much higher. I just don't really kind of see
Where could that come from, though? Where could that risk of higher inflation come from? Is this a wages story, a tariff story? Where does it come from?
Well, so the tariffs is a one-shot kind of inflation hit. Wages are key, of course. But if you have that situation where inflation moves higher due to higher wages, that means it's a very strong job market. That means growth is very good. And so 6% is actually probably a good story, not a bad story. The other way you get there is if there's confidence lost in the U.S. system, and that's a whole different narrative.
It's great to see you.
Thank you.
It's going to be an interesting election. It's going to be an interesting 2025 by the sounds of things as well. Greg, thank you very much. Greg Peters, co-CIO at PGIM Fixed Income. Thank you very much indeed. Let's take a look at what the Core 6 looks like this morning and show you what is going on across Europe in terms of the more important stocks that we watch very carefully. China's a little softer this morning, which I think is interesting. Yesterday we were focused on that. ASML bouncing quite strongly as well. We've got some interesting conversations coming up with LVMH. Luxury is up 2. That maybe is the China read across. It is interesting to see that those stocks there are bouncing back, maybe a bit of money coming out of the pharmaceutical sector. Sort of focus on Ferrari for a moment, which is in the green today. But yesterday, we saw the... you guys are going to be fascinated by this. Just give me
I already am.
Yeah. The F80 gets released. New supercar out of... This is the picture of it. These are the pictures of it. It's kind of... It's part of a Le Mans car. It's part of an F1 car. It's part of a road car. They don't produce many hypercars very often. So once every 10 years, the last one was LaFerrari, they produce a new hypercar. They know where they're going to sell them to. It's a really big deal for Ferrari.
Yes.
What other colors does it come in? That's what I want to know.
Are any other colours appropriate, I wonder? I mean, I was looking at the price tag on this. 3 million, I mean, that's in pounds. 3 million pounds, I think one of these will cost you. It's interesting it comes on the day where we had that news about banker bonuses in the UK. So, you know, if you're trying to find something to spend the money on, then maybe this. And if it all goes wrong, costs 3 million, maybe you could live in it.
So,
it's the price of a very, very large house.
It may not be that comfortable, but it goes very, very fast. And I suspect it's going to be one of those kind of stories that maybe holds its value. Maybe you could see this as an investment. These things, there are so few of them produced. I think just shy of 400. That demand is always going to be there in the resale market. Basically, you have to be a really good Ferrari customer to be offered the chance of buying one of these. It's a bit like a Hermes handbag.
This is like a Birkin for boys.
That's exactly what it is, only in red. Yep. Let's check out what's happening at the individual stock level. Joe Easton has his eyes on all of those stock moves for us. Joe.
So we are seeing some weakness in Essilor today. Remember, the sunglasses and prescription eye care company did report a bit of weakness in the Ray-Bans and other brands last night. So that one coming down around 2% at the moment. But going the other way is Brunello Cucinelli. This is in luxury. It's been a bad week for luxury, but analysts saying Brunello's results just pretty much bang in line with what they were looking for. So therefore, a bit of a relief for the maker of fancy cashmere sweaters over in Italy today. But then the retail space not looking great is Boohoo. That one has actually slightly recovered since the open. It was down 9% at the open. They've announced that their CEO is standing down. They've seen a decline in sales. Margins looking pretty weak as well. We did get that UK retail data, but not seeing a huge reaction. Potentially analysts had a kind of a view on that already, so probably knew that was coming. So we're seeing pretty steady movements in there despite that gain we saw for the pound today. Then in terms of another sector, it is the trucks. Weakness in Volvo cars. Remember in their statement, warning of a slowdown in construction specifically, so a lot of construction vehicles not selling as well. But actually, the other peers holding up okay at the moment. Daimler Truck and Traton actually both stronger in Germany, but Volvo coming down over in Stockholm this morning. Then in terms of another one I wanted to bring you, this one is actually just broken on the terminal. British American Tobacco announcing that they have neared a settlement in Canada on litigation around the healthcare effects of smoking. It's something that's been going on for around 2 decades for BAT. They're saying they're nearing settling that, but that would mean potentially cash coming out for the moment, but later, according to analysts, that might actually be a positive thing for them. Then in terms of the ratings, Goldman has had a buy on Richemont for around 5 years, but they have cut it finally to neutral, given the warnings that we've seen from that sector today. They're not at sell yet, but they have come down, no longer recommending buying that on. And then in the industrial space, also in Switzerland, Schindler, this one is raised to neutral at Boffa. This is the maker of all those escalators that you see. They are citing a better performance in the residential and non-residential real estate market, potentially boosting Schindler, but not seeing too much of movement. It's down 0.2% in Switzerland this morning.
Thanks very much, Joe Easton, with a briefing on those movers this morning. We'll continue our focus on individual stocks. After the break coming up, Netflix is in focus, smashing expectations, delivering a blockbuster set of earnings. We will have all the details on sustainability here, could be part of the conversation. This is Bloomberg.
From our studios in New York and San Francisco, our expert hosts have the data and analysis about the companies you know and the startups to watch, plus the interviews you don't want to miss. Watch Caroline Hyde and Ed Ludlow on Bloomberg Technology, the only daily business show dedicated to tech, right in the middle of the trading action, every weekday, only on Bloomberg Television. Context changes everything. U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers jobs day like Bloomberg.
As we spend some time here on the broader presidential race.
Let's focus in on European politics.
Makes you wonder how politics might play out.
Morning, this is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia. We'll walk you through what you need to know to kickstart the European trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in every weekday at 6 a.m. London time, only on Bloomberg Television. Bloomberg Bloomberg Surveillance covers the latest in global markets and the political events that influence your world. Join Jonathan Farrell, Lisa Abramowitz, and Anne-Marie Hordern only on Bloomberg. Context changes everything. The countdown is on. Everything you need to get the edge at the end of the market day.
Big tech earnings kick off later this afternoon.
Gilead is coming out right now.
We have take two numbers. Back to the markets, right? Our bread and butter.
NVIDIA is one of the best stories in the tech space.
That actually matters a whole lot more.
It might shock some of your viewers.
You're watching The Close.
Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
Bringing you up-to-the-minute financial news whenever and wherever it happens. I'm Michael McKee at the Federal Reserve, and this is Bloomberg.
Minutes into the equity market session here this Friday, and I'm telling you there is a definite China effect in European equities this morning. You've got a whole load of luxury names doing quite well. Burberry's up, Kering's up, Boss is up. You've got Moncler doing well as well. So the luxury names are having a good day. If you take a look at the sector story, where we are seeing strength this morning is in the basic resources. The mining names in particular stand out this morning as we see potentially more help coming through for the Chinese economy, rippling into the housing story. That is a potential positive for the mining names as well. So it's good. The industrial production data out of China as well look fairly favourable too. You would have thought that would speak to the miners as well.
Yeah, and I know some of the write-ups I was reading this morning suggested that the data was mixed, but most of it came in better than estimates, didn't it? Whether that was GDP, industrial output, or retail sales. Admittedly, the estimates, were probably people had low expectation, and this is very backward-looking. It's before we get the effect of any of the stimulus that we might see ahead of us. I suppose the GDP number did slow from the quarter before, and that was the thing that seemed to weigh on sentiment a little bit.
Well, to me, I think what's interesting is that we talked about kind of the connective tissue here. It's very clear in commodities, right? You have the stimulus in terms of the property sector, et cetera. Where is the stimulus and how does it connect to the luxury sector? Because in France, that's where you're seeing the read-through this morning. And yet, that's not as clear to me because whatever happens in the property sector or the market has to help the Chinese consumer and then Europe.
Okay, retail sales around the world look good right now.
Yeah.
Okay? Out of the States, look pretty favourable. The retail sales data out of China this morning has beaten expectations as well. You take the retail sales number out of the UK, a small market, but thanks for it into our thinking as well. All of these numbers look fairly good. So China is, but China's been the area that these guys have been flagging.
Yes. Yeah. And you were looking at watch prices, and I was just looking at a story from our colleague Andy Hoffman just yesterday. Swiss watch exports fell really quite sharply in September, and that was all to do with shipments to China, dropping by half. That's that's the weakness. That's what we're seeing. And Greg Peters was talking to us about this being quite a sort of contained China for China story, but clearly, I mean, equity markets trying to make those connective links.
Yeah, it's a. I don't even know where to go with this because it does feel like a little bit of a head fake. We've been here before where the markets have reacted, and then it's a question of sustainability, and I don't know if this is that moment.
The struggle I think a lot of people are having is putting it all together. How easy is it to create a unified picture of exactly what the Chinese are doing? They're clearly trying to do something. Is it enough? Can you figure out what the various policy announcements that we've seen actually add up to at this point? I think that's the real struggle at the moment. And I think that's where a lot of people are finding it hard. It seems like we are day trading this story rather than seeing it as anything strategic.
Yeah, it's a fascinating one. Again, let's see how much of that sticks amid a broaderly weaker market. It's that China read-through. That's the only one that's kind of vaguely in the green. Let's talk about another story that we have been keeping our eye on in the last 24 hours. Netflix jumped in late trade over in the U.S. after the streaming service added more than 5 million customers in the third quarter, topping expectations across all major financial metrics. Now, analysts had projected about 4.5 million new subscriptions, despite challenges from last year's strikes in Hollywood. Now, Netflix sees growth next year of as much as 13% from a mix of new members and price increases. Netflix co-CEO Ted Sarandos weighing in on the outlook.
Let's start with, looking into 2025, we're feeling really good about the business. We had a plan to re-accelerate growth, and we delivered on that plan. You can see that in our 2024 financials. We expect to deliver 15% revenue growth and 6 percentage points of operating margin improvement. And engagement, which we view as our best proxy for member happiness, because when people watch more, they stick around longer. So that's retention.
Let's bring in Bloomberg's Charlie Wells, an avid Netflix watcher, I'm sure. And
Netflix and chill,
what I really want to know is what you watch on Netflix and what you have watched. But instead, let's talk about how Netflix compared to Wall Street, how are they still doing so well?
So this really comes down to some tried and true tricks that they've had up their sleeve for a while now. So that is that great Netflix password crackdown, which I know annoyed a lot of consumers, but it brought in a lot of new subscribers. Since they implemented that policy, they brought in 60 million new subscribers, and we throw around these numbers all the time, but 60 million, that is the size of Italy's population. So since 2022, they've added 60 million people. That's a lot. They've also rolled out that ad-supported tier, and I think that's been helpful because for those people who were maybe, using mom or dad's subscription, they have been able to get that lower price option. So they have been bringing in a lot of people, an Italy-sized population since that time, and that has really supported their share price, right? Up 300%, over 300% since May 2022.
Okay, so outrageous using the parents' password. Where does Netflix predict the growth coming from then, Charlie? Because you've talked about a couple of trends there, and maybe the lower price option continues to be something consumers like, but you can't clamp down on password sharing forever.
Yeah, exactly. You kind of squeeze them out, and you can't keep squeezing. Management has tried to say that they will be able to keep squeezing, but what we heard in that soundbite earlier was about engagement, and that's a metric that Netflix really wants to focus on. In their earnings call, they talked about how the average user, this is not me, this is the average user, spends 2 hours per day watching Netflix. Like, that's a lot. I don't think any of us has 2 hours a day to spend watching Netflix, but they think that is a healthy metric. And the other thing that they really have been hammering home recently...
A healthy metric for them.
Yes, exactly, for them, maybe not for us, is content. And so they keep talking about how in the pipeline they've got the new Squid Game, they've got NFL games on Christmas. And so if you have this content, if you have a reason for watching,
they're beginning to feel like networks. Which is really interesting. There's a story in the Journal this morning. It's not about Netflix, but it's about Brian Williams is going to host a live election night special on Amazon Prime Video. It's a one-night special, streaming's first foray into live news programming. You've got, as you just mentioned, the NFL games on Christmas Day on Netflix. This is becoming a linear TV product.
It's like what's old is new and what's new is old, and you kind of had that like...
There's nothing new in television. I've definitely...
I believe that. And you get this like disintermediation, then it comes back. And I think, again, they have some of the issues that networks have is, advertising, right? They've got to get advertising right. Management was talking about how they need more time. This is something that's been expensive for them. They've got to kind of roll out that ad tech, and they need, which we do here in linear television, inventory. And that's kind of where sports come in. The other thing that I think we should talk about is pricing, right? Because Netflix has kind of become the value option for a lot of people.
Really?
Yeah, they've got that higher tier, but they've got that ad-supported tier.
Yep.
But can they increase prices? I think it comes back to content then. Do you have the stuff that people want to watch? Are they willing to pay for it?
Ready to see Charlie? We're going to find out what Charlie watches in the break. That's coming up in just a moment. Maybe we'll reveal the secret. Anyway, up next, we're going to talk about UK business. Ahead of the budget, we need to take its temperature. We'll do that next. This is Bloomberg.
I've seen firsthand how some fashion businesses make women feel. And I think there's one thing, being really vocal and being an Instagram activist and talking about something, there's a difference than putting your money where your mouth is and really trying to do something about the problem. And that's what I did with that business. It was about how do I take everything that I know and I've learned and actually do the opposite. And I think that as a young black female entrepreneur, the only thing that I could do was what I know from my experience. And the honest truth is, I didn't set out to create a company that was like deeply rooted in the principles of inclusivity and diversity. I set out to make a company that was right for me and my friends, and I knew that if I had a problem, chances are somebody else does. And I think that's where so many businesses are, created, when you're solving a problem that's real for you and therefore real for the consumer.
From the beating heart of global finance, economics, and politics, and wherever newsmakers are moving markets. Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this a new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacroix, and this is The Pulse, every weekday only on Bloomberg.
Welcome to the world of decentralized finance.
With a surge in Bitcoin, you have crypto stocks also surging.
Bloomberg's covering all things crypto, the people,
This is a political attack, and we must hold our elected officials accountable.
the transactions,
Really a record-breaking moment.
Bitcoin is the exit strategy.
and the technology.
Awareness is going to grow, and these things grow the overall industry.
Crypto as an asset class is here to stay.
Bloomberg Crypto, only on Bloomberg.
Middle East and Africa. Vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
Welcome back. Friday morning. This is the opening trade. 30 minutes into a session that has turned a little more positive than where it was when we started. We had seen a lot of pressure on some of these markets. The FTSE 100 is still under pressure, down by 0.3%. But elsewhere, we see modest gains. Pretty flat, though, overall. Let's turn our attention to the UK economy and one measure of it. Business activity among UK small and medium-sized enterprises cooled in September, whilst employment remained strong. This is all according to the findings of a NatWest survey. UK SMEs reported optimism for year-ahead growth, but the overall degree of business confidence slipped to a 10-month low, with some citing concerns ahead of the autumn budget due on October 30th, of course. Let's bring in James Hollian, who is Head of Business Banking at NatWest, here on set this Friday. James, good morning to you.
Good morning to you.
It fell marginally, this reading of business activity among SMEs, into contraction territory, actually, but it seems as if the wider story, there are some reasons to be a little more cheerful?
I think there's definitely reasons to be cheerful. It's a mixed set of results, almost like the morning markets that you were talking about a minute ago. Confidence and sentiment often drops at this time of year as well. So it's quite consistent, actually, with last year at this time.
Yeah, and I wonder, for this particular cohort, how stimulating is it to have rates coming down? Because a lot of people talk about, we're going to stimulate the UK economy because rates can come down, and that's the way that things should work. But if these businesses don't have a lot of debt, do they feel that kind of vibe?
I think that's one of the things that is interesting about small businesses. There's quite a lot of them that are actually very cash rich. So for the last few years, and higher rates has actually been quite positive for them as they've been able to earn interest on their savings. For those that do need to borrow, obviously lower rates would help. But the rate cuts we're looking at over the coming months aren't particularly massive in terms of small businesses.
That's a really interesting dynamic, the way that UK rates work and how higher rates can actually be stimulating because of the interest you earn on them.
Well, that's been one of the problems that we've been watching for.
The transmission.
The transmission has been slowed because a lot of people locked in lower rates, and also potentially those that are cash rich and maybe older generations are benefiting from that. It's interesting that small businesses are doing the same thing. Are they worried about the budget?
I think, again, it's a bit like the overall story. Some of them are worried, some of them are less worried.
Why are they worried? Why are those that are worried?
I think there's the $64,000 question, or the £40 billion question, as you might term it right now. And I think the government's being very careful. The government has certainly come in and been very pro-business in their rhetoric, but small businesses are worried, right? You'll see in our report, construction's doing quite well. Services industries have had it more difficult. If you look at restaurants and things like that, I think we're all aware that they have a difficult time of late.
How specific did you get into this? Is it concerns around, for instance, NI and pensions and capital gains tax? Where is it specifically that there is concern?
It's not specific about any of those things. Most small businesses really are focused on running their businesses day to day rather than the upcoming budget. But if you have had a tough time in recent years and you are more fragile, of course, as a small business owner, you'll be worried about it.
Just to follow up, do you think small businesses and the people that run them would be deterred from starting small businesses were capital gains to be higher?
No.
Good answer.
Talk to us a little bit more about the fiscal side here. How do you subsidize some of the small and mid-sized business activity when you're seeing a lot of that happen, for example, in the States?
Sorry, how do we subsidize?
Yeah, or how do you help them? How do you incentivize
How's the government
from
help
a fiscal
them?
perspective?
Yeah, I guess so. there's quite a lot of focus around long-term and increasing our focus on investment and long-term in the UK. In the US, I think the government and business has been better at focusing long-term, as well as in Germany and things like that. And we've probably had too much of a short-termist mindset in the UK. As we look forward as a country, I think there's probably three things that we really need. First, we need a sort of thoughtful approach to managing the economy. Right, that's really important. Some of the changes that are being discussed right now might have unintended consequences, and thinking through what those things are really needs to be thought about. Secondly, as I said, being long-term. And then third, being predictable, right? Small businesses like a stable and predictable environment. We haven't had that in recent years with COVID, with Ukraine, with energy prices, with Brexit and all of those things. And right now, it actually feels more stable now, both for now and in the as we look ahead.
The Prime Minister's talked a lot about regulation and the need to maybe push back and push down regulation to make the regulatory burden less onerous. Is that something that small businesses complain about as well?
It's definitely an issue for smaller businesses. Regulation is typically harder for small businesses to deal with than larger businesses. And when we're talking to them, right, they are concerned about new regulation because they're just not of the size with professional HR or finance departments.
Does the new employment laws make it harder, easier to hire? It does seem as if they're hiring at the moment. Actually,
they're hiring at the moment.
Looks good.
They're hiring at the moment. We've seen more hiring. The Employment Rights Bill is being talked about at the moment for launching kind of 2026. So there's good time for the government to get that right. Government is clearly trying to do that for the benefit of employees, but government also recognises the importance of business creating jobs and those things. So I think government will be appropriately balanced on those things.
All right. James Holian, Head of Business Banking over at NatWest. We thank you so much for joining the program, telling us a little bit about what those SMEs actually look like. It's a fascinating question as well because there's so many interdynamics that we are seeing within the city and, of course, how the broader fiscal policy and monetary policy affects a lot of that. Let's go straight to that conversation. Black workers and diversity practitioners in the City of London have told Bloomberg that corporate priorities are shifting away from diversity. The UK's financial services sector had pledged to boost representation in the wake of George Floyd's death. But 4 years later, progress remains uncertain. Bloomberg's Tiwa Adebayo joins us for more after months of investigating this story. Tiwa, talk to us a little bit about this. We've seen a pushback against DEI in the States. Is it happening right here in the UK?
So in the States, we see that the pressure is really coming from the regulatory and legal side. That's not happening in the UK. In fact, the change is being driven by firms themselves. So they're reducing their spending on DEI initiatives. They're reducing their spending with groups that work to bring diverse and black talent into the city. I actually spoke to one of them, the Taylor Bennett Foundation, which operates across the communications landscape, but they work with the likes of HSBC and Santander, and they told me that spending on their paid internship programs is actually down 25% since 2022. And that's despite seeing quite a big uptick in interest in 2020 after the murder of George Floyd. So we are seeing a bit of pullback from firms in this space.
Yeah, and Tiwa, tell us a little more about what is behind this, because you've contrasted a little the drivers between the US and the UK.
So I spoke to someone who put it quite succinctly to me, and they said that there's a perfect storm at the moment, and that's because there are economic headwinds, there's a tense political climate around DEI, driven slightly by what's happening in the States, and because of that rush to bring in change that we saw in 2020, a lot of firms aren't seeing the sort of results that they need to justify that investment, and so they're sort of reassessing with squeezed budgets, and they're thinking perhaps we need to pull back here, perhaps we need to reassess and see how we can further drive change.
Okay, so what does this actually mean in practical terms? What does it mean for black workers?
So I spoke to a number of black workers across the City of London, from private equity to investment banking, and what they're telling me is that it's really impacting their day-to-day life. So they're noticing subtle changes, so that could be a reduction in the number of Black History Month events, a reduction in networking events for people of colour, and that's impacting them, and we can see it actually reflected in the data because black people are leaving the city before they reach its top rank. So, for example, in UK law firms, black people are 4 times more likely to leave than their counterparts. And if you look at the top levels of, say, investment banking, for example, in the UK, the representation for black people is just 0.5%. And we can see that maintained across ethnicity pay gap data as well. There is a big gap, particularly for black workers, and that suggests to us that there is a concentration of black talent at a junior level. So the real impact that we're seeing is quite high attrition and black people leaving the city because they don't feel supported.
Tiwa, we're going to leave it there. Fantastic reporting. Thank you very much indeed for bringing it to us, Tiwa Adebayo. Let's talk about what we are watching in Germany right now. I want to take you there. We have a live shot coming from the Bellevue Palace. We are anticipating the imminent arrival of President Biden. He will meet the German president, Frank-Walter Steinmeier, very, very shortly. Nice day in Berlin. We'll see what comes out of this a little bit later on. We're anticipating a press conference, and we'll bring you the details of that later on in programming. Let's turn to talk about what we're going to be having next on the program. We're going to be talking about what is happening in the commodity space. Gold is a fascinating subject right now, as is the energy market. Nadia Martin-Wigan from Svelland Capital is going to be joining us next. We'll talk about that gold story. That's the first question, but I would talk about gas as well. That's going to have an interesting impact in Europe this winter. All of that coming up. This is Bloomberg.
What prompted you to want to get out of just doing surgery to be an administrator and a hospital leader?
Watching others who did it well. I had a dean who recruited me from Birmingham, Alabama to Minneapolis, Minnesota, which is a big jump to convince me to move my family. I realized over time that my training as a surgeon brought a set of credible things to the table. One, if surgeons have a measure of emotional intelligence, not much of our training reinforces that. It reinforces skill, not necessarily emotional intelligence. But if a surgeon has some self-awareness and emotional intelligence, what they bring to the table of leadership are three fundamental things. Number one, they do everything in teams. Their operations, their patients they see is all team focused. Number two, they value process, but they hold themselves very much accountable to execution. They understand that it's good to explore a patient, but what really matters is that you take the tumor out. And then number three, they make difficult decisions on incomplete information. Those things I realized that I could bring to the table as a leader if I had a sort of a passion for working with people and had some sense of self-awareness.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
This is Bloomberg Technology.
This is the Asia Trade.
You're watching the close.
Welcome to Balance of Power.
This is Bloomberg. Get your fixed income fix. Watch Bloomberg Real Yield every Friday right here on Bloomberg. Context changes everything.
Welcome back. You're watching the opening trade. We are 42 minutes into the equity market session, broadly positive. We've turned around a little bit, so a more positive sentiment beginning to pervade the story here. You're seeing luxury doing fairly well, and you are seeing the mining story doing very well as well. All of this off the back of what we're seeing in China. We'll come back to the China story in just a moment. I want to talk about the geopolitical element to all of this as well. Israel says it will continue fighting the war in Gaza even after the death of the Hamas leader Yahya Sinwar. The US President Joe Biden has said that his death presents an opportunity to end the war in Gaza, though, but the Israeli Prime Minister Benjamin Netanyahu has vowed to keep fighting until all hostages have been freed. Oil prices very much in focus on the back of what we're seeing here. We're watching the Middle East and the story. We're also watching what is happening in China as well. Let's talk a little bit about what the commodities picture looks like in totality. Nadia Martin-Wigan, who is Director of Svelling Capital, sitting around the table with us this morning. Nice to see you.
Good morning. Thank you.
Not much movement around the oil price, around what is happening with geopolitics right now. Is that a surprise?
Well, the markets accepted that Israel is not going to go after either Iranian nuclear capabilities or after the oil complex, at least until the election. So we have almost 3 weeks.
Okay. So given that we've got a little bit of a hiatus until we see maybe that big factored back in, what is driving the story? I'm looking at China looking relatively strong. We've got a stimulus story that is coming through, albeit in a piecemeal fashion. The US data looks super strong right now. Why aren't we seeing some of that more positive economic news potentially being priced in?
Well, the China stimulus will really affect oil demand next year, in our view. When we look at inventories, yes, they drew in the U.S. That was a positive, but it was a little bit of a surprise given that imports were so low. When we look at the physical market, we have all these Libyan barrels that have come back into the market, and they're very prompt, and they're available cheaply. So the market needs to absorb that additional supply, and so that physical picture isn't as supportive as that paper picture on the geopolitical side.
Nadia, talking about the effect of China next year, does that mean you quite like what you hear out of China and you think that it is material and it's going to make a real difference? Because sort of day in, day out, it seems difficult to assess.
Absolutely. When we look on the actual retail level, it helps individuals around $300 a month in terms of spending purchasing power. When we look at which part of commodities will be most supportive, we see that on the metal side. We also see a lot of activity coming forward in terms of energy transition, grid spend, and so forth. So we think it's actually more supportive towards iron ore and copper and LNG. And then eventually that will trickle down into oil next year.
Is that because it helps the property sector and we see more construction, or people spend more money on cars and they use metals? I mean, what's the sort of linkage?
I think on the property side is more that we're looking at bottoming out. We haven't really seen growth. Spending on cars is definitely suffering. $300 a month we don't think is going to be spent on cars. More likely to be spent on savings, also on gold and on some purchasing. But we really want to see that impetus in terms of that consumer coming into the market. When it's the renewable side, it's more government spending and infrastructure.
I want to circle back to where Guy started, which is kind of a little bit of the geopolitics here. Is there a complacency in this market when it comes to whether it's gold or whether it's oil reacting to developments either out of the Middle East or in the war in Ukraine? Is that even a factor the way it was, say, 2 years ago?
It's less of a factor than it was because the market's become more numb. The latest developments in terms of escalation has kept a longer war premium than, let's say, we saw in April in terms of the immediate effect. But of course, we came from a very short market. Net length was short in oil, and that is because of this concern in the near term about an oversupply and whether OPEC will stay together and actually maintain production discipline and cuts through next year. When we look at the war with Ukraine, I mean, what we saw yesterday is additional sanctioning of tankers and some LNG vessels on Russia. So there's a question if the U.S. will continue to make things and the G7 more difficult for Russian exports. But that immediate impact will be more on the actual shipping sector, so on the tanker market, on the LNG markets, rather than on the oil or natural gas balances, because we have the demand. So the commodities will have to get out.
In aggregate, is there a danger that Europe is undersupplied this winter when it comes to gas? So we perceive China's stimulus as being positive for Europe because we see extra demand coming through. But actually, if the Chinese economy starts to pick up the pace, then gas demand is going to increase. They're also converting, as you say, trucks potentially to running on that gas as well. That increases the demand as well. Europe is going to need quite a lot of supply this winter. If China's competing for it aggressively, what does that mean for Europe?
Well, it means that it will be a fight to pull in barrels. And we have to remember that storage is around 95% full.
Yeah.
But at 100%, that only fills 25% of European demand. The reason why the gas price has been as stable as it has been is because we have records amount of hydro available. It's the opposite of 2022 when we had a drought across the northern hemisphere, and we also have more renewables capacity, but we can't guarantee how much wind is going to blow throughout the winter.
So we get a cold winter. What do you think gas prices, how much higher could they potentially be?
It's always difficult to say how acute it is, what happens in the Middle East, if Qatar is not delivering, but I mean, 10% upside easily. And that is something, when we look at positioning, it's not bullish right now among speculators in natural gas, so that creates a lot of upside going forward. But I mean, we've had, in 2022, enormous growth. So what is 10% versus hundreds?
Well, back in 2022, there was also a question of that there's no infrastructure to import some of this stuff, specifically from the United States. The exports coming out of Louisiana, for example, or Florida, there was no place to come at it. 2 years later, I think you hit on this, that there are terminals now in Greece and in other places. Talk to us about that export dynamic, especially in the context of the U.S. election.
Well, this is where, when the Biden administration put that temporary halt on things in LNG, that put a lot of fear into Europe, because that is meant to be our long-term partner. Qatar came in there and said, oh, we will be the long-term provider. In the meantime, though, we are supposed to have LNG terminal trains come online in Q4, and they've been delayed. Q4 this year to Q4 next year. So it is actually a tighter supply picture in terms of what is coming out. We constantly get outages in the U.S., in terms of exports, and we could still have another hurricane, which we don't know how that could affect things.
But you mentioned that key piece, which is that Biden had created that lock on that federal export piece, and that did show up in the markets. Now that he is not going to be the next president, is that risk eliminated, given that Kamala Harris and President Trump, former President Donald Trump, have very different approaches to the energy story than Joe Biden did?
Yes. In our view, it's very important that security is prioritized, and so we expect that both will allow LNG permitting to continue. In our view, that was more of a tactical move by the Biden administration to support industry within America that wants as cheap natural gas prices as possible as an input. But really, in the medium term, it's far more important to have that relationship as a serious gas exporter, so that Europe and the rest of the world does not become more dependent on Russia, the BRICS countries, the Middle East, and so forth.
Nadia, what's happening with gold exactly? It seems that the gold price, I mean, we've touched new highs just in the last 24 hours, keeps on rising. We were throwing around this idea of, what exactly is driving gold higher. It seems to be immune to all the conversations about pairing Fed rate cut bets as well, which is sort of day-to-day kind of interesting. So what's the longer-term momentum? Is it a haven? And if so, is it from geopolitics in the Middle East or U.S. politics?
So I would say it's a combination of all those things. The main buyer consistently this year has been governments. And this is when we look at the geopolitical situation, the U.S. likes to, sanction through the U.S. dollar. And this, when we look at Russia, 26% of foreign reserves are held in gold. If we look at China, only 4.3% are. So if China wants to go more the Russia route and be more immune and be able to more easily purchase Russian commodities, there is a lot of buying to still come going forward. And there's a major BRICS meeting next week in Russia that's taking place. And Saudi Arabia looks like won't be joining, but still you have Iran there, you have a big expansion. So this is, I think, in terms of diversification, a huge driver. But on the ETF side, that's where, the U.S. came into that market as a net buyer in July, and we've seen globally net buying come in since April. And, in May, that's when we hit that first all-time high, and we've just been going higher and higher since.
So how does the U.S. election play in? I mean, if we see another Trump presidency, a lot of people say that would be inflationary. So that's one side of things, but it also might increase geopolitical tension, which plays into some of the themes that have been driving gold higher.
Both camps are into fiscal spending, so probably both will be inflationary in our view. But Trump has specifically said that he will go after countries that try to go off the U.S. dollar. So that will be quite interesting. And this is where I think the communication out of this BRICS conference will be very careful and we'll have to see over time how things change. What we've seen recently, actually, is it's been a step away from the euro, not really the dollar in terms of the changes of flows.
Okay, Nadia, thank you so much. Nadia Martin-Wigan joining us from Svelling Capital, setting us up for that BRICS meeting. Really interesting. It does seem the Chinese will be in attendance at that, so certainly something we will continue to watch. And speaking of China, we've seen real strength in Chinese assets, haven't we, coming towards the close? Well, when we were running up to the close, things really strengthened over in the Chinese market. We saw the Shanghai Composite, the CSI 300, measures of tech stocks and tech strength, the Hang Seng, all of that doing really well. And then that pushes through into luxury names, perhaps here in Europe. Let's have a quick look at where we are on the luxury story. We can see some positive moves coming through on some of those luxury stocks this morning, some up more than 3%.
It's interesting. You've got a fairly nuanced picture emerging in the commodity space. Just been talking to Nadia about that. Aluminium, copper, higher, but you've actually got iron ore a little softer this morning, which I think is interesting in the light of what we've heard from the Chinese. Crude, absolutely flat. Very little movement there. In terms of the way it's translating through into some of the mining stocks, as you can see, quite a lot of green on the screen when it comes to the luxury names. I'm sure at some moment we're going to see what's happening with the mining stocks as well. And there you go. A positive picture there as well.
Positive picture there as well. Let's look ahead to what we're going to get next week, because it is, of course, Friday, and there are a few programming notes to be making. ECB President Christine Lagarde sitting down with our very own Francine Lockwood. That coming up at Tuesday at 3 p.m. UK time. It's a conversation you will not want to miss. Plus, the ASML CEO, as part of the Bloomberg Tech Conference, also on Tuesday. Catch that at 9 a.m. UK time. Fascinating conversation at a time of a lot of geopolitical tensions. But before we go into all of that, we've got the weekend. We do.
That's the most important thing. It's Friday. TGIF. What have we got coming up this weekend? The film festival continues here in London. Dutch Design Week, I am told. That feels like an Anna Edwards edition.
Do you know, I went on... Don't go on the website if you're feeling fragile, because it's extremely bright this Friday morning. Almost blinding. But very exciting.
I'm looking forward to that. The head of the Charles Regatta, so that's a rowing race.
Can you tell that there's a very keen rower on our team?
Yes.
Yeah, sort of subtly slipping in these rowing references.
I'm going to put the sailing in as well. It's 4-2 in the America's Cup. 2 races this afternoon. We want it to be choppy. We want Britannia to do well. We need the weather to be a little bit more blustery off the coast of Spain. And the football's back. The Premier League is returning. It's a busy weekend coming up. You're going walking, though.
I'm going.
Critty's going for a yomp this weekend.
There's a debate of whether it's a walk or a hike, and we don't fully know, but we're going to find out. And we'll report back on Monday.
The royal we.
We, as in like me and my friends.
Pretty weirdly loses her voice when she goes walking.
It is, so we'll know how it goes.
How tough it was.
If it's a hike, I might lose my voice. If it's a walk, it might get a little louder. We don't know.
So The Apprentice, the film The Apprentice, is out as well. Did we mention that as we were looking at the things that are going on?
Donald Trump connection here as well?
Yes, I know. I find it interesting. It's fascinating, isn't it? Talking about broadcasting, no impartiality rules, I suppose, in cinemas, in movie theatres, ahead of elections, in the same way that there are in news channels. But there you go, looking at some images of that.
Okay,
that takes us to the end of the program.
I was just trying to work out.
Speechless.
How do you follow that?
I haven't seen the trailer yet, but this is exciting stuff. No, I am speechless. I'm preparing for this weekend, but a lot going on. I don't even know where to start. I kind of feel like the London Film Festival might be the most exciting one out of all of those.
At the America's Cup. You're like,
correction.
The Spanish connection, I would have thought you'd be all over that one. So, yeah, this afternoon, we need the weather to be bad. That is the critical thing. We want it to be blustery, so that our boat performs better. Anyway, that's it for the opening trade. That's the opening trade for this week. We'll be back, of course, next week. We've got an interesting week next week coming up. We also have Joe Biden about to arrive in Berlin. We'll be bringing you those live pictures throughout this morning. Have a great weekend, everybody. This is Bloomberg.
This is Bloomberg News Now.
News when you want it at the touch of a button.
Another volatile day on Wall Street. We're seeing big moves.
All eyes on Capitol Hill as Democrats and Republicans prepare.
Today's job numbers casting doubt on the Fed's next move. Inflation remains front and center. And that's news when you want it with Bloomberg News Now. Get it 24/7 on the Bloomberg Business app, Bloomberg.com, and anywhere you get your podcasts.
Bloomberg News Now. Context changes everything.
Bloomberg covers the world with unmatched reach and resources. From more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg, context changes everything. From our studios in New York and San Francisco, our expert hosts have the data and analysis about the companies you know and the startups to watch, plus the interviews you don't want to miss. Watch Caroline Hyde and Ed Ludlow on Bloomberg Technology, the only daily business show dedicated to tech, right in the middle of the trading action, every weekday, only on Bloomberg Television. Context changes everything.
DOJ or other authorities
could face bigger challenges next.
Fed was going to keep rating World Cup. This is a 3.
As the economic picture
Covering the intersections of Hollywood, Silicon Valley, and beyond.
Good morning. This is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia. We'll walk you through what you need to know to kickstart the European trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in every weekday at 6 a.m. London time, only on Bloomberg Television.
Israel kills Hamas leader Yahya Sinwar, the architect of the October 7th attack, spurring U.S. calls to end the war in Gaza. But Israel's prime minister vows to keep fighting until all hostages are free. In the markets, Chinese equities rally after better-than-expected GDP data and retail sales in the country as the PBOC steps up support to help prop up the world's second-largest economy. Plus, the ECB lowers rates as expected, with investors now seeing another cut in December. Meanwhile, the latest U.S. economic data cool bets, of course, of Fed easing. Now let's take a look at the European markets map. A lot going on. Actually, markets are pretty much steady. We have quite a lot of data coming up, not only today, but into next week, and then the earnings season continues. If you look at European markets for the moment, the CAC 40 gaining some 0.4%. We're seeing small gains, but gains nonetheless. The FTSE MIB and the DAX over in Germany, the FTSE and the IBEX seeing a little bit of pressure. Now, again, traders trying to roll back maybe some of the expectations of interest rates cut from the Fed in the face of solid retail sales. Gold hit a new record. That's partially, of course, of what's going on in the Middle East and some of the perception in terms of risk rewards, some of the cross assets. Let's get to cross assets because I also want to show you not only gold but pound strengthening. UK bonds actually dropping after, for example, this morning British retail sales unexpectedly rose in September. Gold 2,703, and then we'll have a full roundup of oil because of tensions in the Middle East with Javier Blas. So for the conversations that matter and the insights you need, let's get started.
Newsmakers and market movers. This is The Pulse with Francine Lacqua.
Well, good morning, everyone, and welcome to The Pulse. I'm Francine Lacqua here in London. Now, Israel says it will continue fighting in the war in Gaza, even after the death of the Hamas leader, Yahya Sinwar. Now, the U.S. President Joe Biden has said his killing presents an opportunity to end the war in Gaza. But the Israeli Prime Minister Benjamin Netanyahu says the mission is yet to be completed.
I'm standing before you today to inform you that Hamas leader Yahya Sinwar has been eliminated. The person who committed the most terrible massacre in the history of our nation since the Holocaust, the mass murderer who murdered thousands of Israelis and kidnapped hundreds of our citizens, was eliminated today by our heroic soldiers. And today, as we promised to do, we settled the account with him. Today, evil has suffered a heavy blow, but the task before us is not yet complete.
Well, we're now joined by Bloomberg's Jumana Bersace in Dubai. Jumana, good morning. So how does this change dynamics in the Middle East?
Well, it's another significant event in the region. Yahya Sinwar certainly had been on the target list for Israeli forces for many months now. There had been several attempts to eliminate him. But what became apparent in the last 24 hours is this case of killing him was actually on the back of what was apparently a chance encounter. The leader, Yahya Sinwar, was actually in the southern part of the Gaza Strip above ground when Israeli tanks noticed suspicious activities in a residential building. Israeli tanks then fired at that building, and it later emerged that the target was indeed Yahya Sinwar himself. And this was perhaps a little strange because it had been widely reported over the last 12 months that had been operating underground in some of those tunnel networks. But in terms of the significance, Yahya Sinwar, of course, was recently appointed as the political leader of Hamas after the assassination of Ismail Haniyeh, but he's a figure who has loomed large over Hamas over the better part of the last 2 decades. He's also known to be one of the masterminds of the October 7 attack. And right after October 7, the defense minister, Yoav Gallant, the Israeli defense minister, said that one of their war objectives was actually to eliminate Yahya Sinwar. And that has happened, which means that it is another feat for Netanyahu and the Israeli government. This comes on the back of the killing not only of Ismail Haniyeh, who I just mentioned, but other senior Hezbollah commanders and Hassan Nasrallah as well.
So, Jumana, who will lead Hamas now?
That is the big question. A couple of names have been put forward. Khalil Haya is one of the names that people are saying, and he obviously resides in Doha, so that could potentially be an opening for these ceasefire discussions to continue. Some of the other names that are put forward are also names that some of the people residing in Beirut, for example. It is unclear at this point who is going to be the natural successor. But one potential opening, if you frame it within the context of these ceasefire discussions, is that Yahya Sinwar himself was known to be quite adamant and stubborn when it came to those negotiations. He was resolute and very hard-minded on the possibility of securing those hostage releases. But I think looking ahead, the question is whether or not his successor will not only be more open to those ceasefire discussions, but also whether or not Hamas as a force will manage to regroup and whether this new person will have the ability to influence the direction of Hamas going forward. So again, big questions here.
Jumana, thank you so much. Jumana Bersace there in Dubai. Now let's also bring Bloomberg's MEA News Director, Rosalind Matheson. Ros, does this escalate tensions in the Middle East, or is there more of an opportunity for peace?
Well, it's interesting because it could go either way. You can see the reaction from countries including the US, France, also Emmanuel Macron, yesterday very quickly saying, you know, obviously this is a big moment for Israel, but it's also perhaps opening the way to those ceasefire talks that Jumana was just talking about, the release of the remaining Israeli hostages and a chance to de-escalate the conflict inside Gaza. But also you can see, you know, is this a moment that emboldens Israel? Does Benjamin Netanyahu say, okay, well, I can push on now and completely degrade Hamas? You know, that's the goal, right, is to completely destroy them in Gaza so they can never attack Israel again. Push on with that. Meanwhile, still pushing very heavily against Hezbollah in Lebanon, and more broadly the tensions with Iran that are going on. We're still waiting for Israel to retaliate against Iran for the latest, you know, ballistic missile attack that Iran did, and Israel has said that that's coming either way. So is this a moment that, you know, pushes Netanyahu further, or does he sort of say, well, actually this is a moment when we can also redirect potentially the conflict on the ground? You can see a case for him wanting to push on.
So do we know what China wants in this, and is it significant? Will we know, you know, this again is a good opportunity, I guess, for, you know, big important countries to come out to kind of map out what they would like?
It's interesting to look at countries like China because, you know, historically they say your affairs are your affairs unless they affect us directly, and China's been quite hesitant. You can see that also with the conflict inside Ukraine, urging everybody just to sort of de-escalate. But You know, China also has its interests in the Middle East, and those are not just strategic, but also very much economic trade. They want trade and investment working for them in the Middle East, and this disruption that's going on, obviously, including to shipping, is not good for China, and China needs its economy ticking over. We can see that with the policy announcements coming from Beijing lately. So certainly you can imagine like China quietly nudging for this to happen. And you can see, you know, countries in the region, you know, Qatar again, but also the UAE pushing, you know, for ceasefire talks to resume. China perhaps in the back end whispering in the ear on that front.
So, Roz, are you expecting quite a lot of mediation or you know, attempts at mediation over the next 4 to 5 days?
We can see people will try and use this as a window to restart those conversations. And as Jemana was saying, it's important to see who replaces Sinwar, if that's someone who's based in Doha, who's more amenable to those direct conversations, or if it's someone who's still in Gaza, it's more complicated. But equally, there are other parties in these conversations, and Israel has also taken a pretty firm line on their conditions for a ceasefire. So it's not just about Hamas coming to the table, it's Israel also doing the same. You can see everyone's going to be pushing for that to happen in the near term.
Roz, thank you so much. Roz Matheson there, of course, the news director for EMEA. Coming up, traders raise bets that the ECB may go for a jumbo rate cut in December, following the first back-to-back cuts in over a decade. So we'll bring you the details next, and this is Bloomberg.
Is on. Everything you need to get the edge at the end of the market day.
Big tech earnings kick off later this afternoon.
Gilead is coming out right now.
We have take two numbers. Back to the markets, right? Our bread and butter.
NVIDIA is one of the best stories in the tech space.
That actually matters a whole lot more.
It might shock some of your viewers.
You're watching The Close.
Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
Middle East and Africa. Vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
From the beating heart of global finance, economics, and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacroix, and this is The Pulse, every weekday only on Bloomberg. The conversations that matter, the insights you need. This is The Pulse, and I'm Francine Lacroix here in London. Our market's pricing in a 20% chance of a half-point reduction by the ECB in December. That follows the first back-to-back cuts in over a decade. Now, the ECB president, Christine Lagarde, says inflation is moving in the right direction.
We believe that the disinflationary process is well on track. And all the information that we received in the last 5 weeks since our last monetary policy decision, we're heading in the same direction, lower. That is what has caused us to make the decision to cut our 3 rates by 25 basis points.
And I'll be speaking exclusively to Christine Lagarde at the IMF annual meeting next week. You'll be able to see that interview at 3 p.m. London time on Tuesday, right here on Bloomberg. Now, to talk more about the markets, so we're joined by Marwena Koniam, Bloomberg's Markets Today team, and Natalia Lipikina, head of EMEA Equity Strategy at JP Morgan Private Bank. So thank you both. It's been a big week. I mean, in the markets, there's been so much going on. Natalia, let's kick off with you. We heard from Christine Lagarde. I don't know what, there's a lot of data dependency given some of the uncertainties surrounding the European economy. What does it mean for markets in general?
Yeah, good morning. Happy Friday. Thanks for having me back. When we look into the markets, we're definitely seeing that data has been slightly decelerating in Europe, and we heard that from the ECB yesterday. It was a relatively dovish 25 bips cut. So what we're assessing right now is understanding where the data goes from here, and if you look into the earnings season in Europe, it has been a bit disappointing.
They've been all over the place, I feel, earnings. It's really almost company dependent more than sector dependent.
I think it's a bit too early because we're still very early in the earnings season. But overall, we're definitely seeing a big disparity between the US earnings, where the market expects 3-4% earnings growth. We think it could grow actually 7 to 8. And then in Europe, where earnings are actually declining by 8%. And so far, what we saw, the market has been slightly disappointed.
Marwena, when you look at and put this into context of global risk, it's Middle East. I feel like the Fed is still the main driver in changing equities overall. But what do you see deciding the markets next week?
Yeah, I mean, it is a very interesting time. Obviously, we've had stronger data coming through from the US, retail sales in particular. That's actually weighing on the dollar a bit at the moment. But of course, people are repositioning ahead of next month's Fed's meeting. And of course, with the elections looming increasingly close now. So we're seeing quite a lot of sort of interesting domestic US pulls there. But then, of course, as you said, the global picture is increasingly fraught and uncertain. And so you're seeing haven assets, things like gold. Gold's at a new record today. So it's not necessarily one thing in the US that's going to be driving the trajectory in markets. And I think, the world is really weighing on quite a lot of assets at the moment, as well as looking ahead to those key indicators in the US.
Elections. What elections? 18 days. Who's counting? Natalia, does it change everything in terms of policy and therefore, your outlook on US companies and also how they relate to Europe?
Overall, we think that what matters to the market is the state of the economy. And if we look into the US market, we actually heard from the US banks that consumers, one of the most important pieces of the market right now, is actually relatively stable. And we're looking into the labor market, it is very resilient. So for us, this is the most important as to what drives the earnings, in the future in general. When it comes to Europe, I think European outlook can be quite volatile, and the market is definitely in the wait-to-see mode what's going to happen over the next month.
In terms of sectors, luxury is having a tough time. I know, for example, the chips, it really depends on who you're selling to.
Yeah, absolutely. With a sector that we're very positive right now is actually industrials. When you look into the industrials, we think that the data centers stimulus is still very strong. And we heard for a few companies that infrastructure data centers is where the demand is going. And we think that in general, the AI trend will just not benefit the technology companies, but also the value chain in industrials and utilities companies. Luxuries are having a bit of a tough time, but overall, in the long term, this is the area of the market which we feel very comfortable in.
Marwena, again, there's this gravitational pull from the Fed, and you mentioned retail sales, and frankly, expectations for Fed cuts have been all over the place. They've been, seesawing. But how much is that important compared to what we're seeing in China, for example?
Well, exactly. The Chinese demand is really driving an enormous amount of the market at the moment, or concerns about it. So every time we see commitment to stimulus, the government stepping in to support the stock market, for example, like we have done, you see that really reflected in asset prices like the commodities, and that flows through, of course, into companies like miners. Even in the UK, miners are always leading the FTSE today again, and that is really something that is in flux quite a lot. And from a US perspective, you also have the tech industry. And the competition, but also demand. So, things like chips, things like Apple, iPhones, all of these factors play into both sort of upcoming earnings seasons. as well as actually what the economy starts to look like and the concerns there. And again, the election is incredibly important for those diplomatic relations and trade policies.
Yeah, trade, which leads to inflation. Why are you so selective on European equities, Natalia, given that, some of these companies are also very broad and very international?
We're looking into the growth momentum, and the growth momentum in Europe has been slowing down. We have seen the earnings downgrades since August. This is when we became a bit less positive on the market in general, and therefore we want to be quite selective in terms of what we own. Europe in general is quite a complicated region. You need so many things for Europe to work, and therefore we prefer to go into those multinational companies that we know that they sell to the rest of the world, not just Europe. They also depend on the US market that currently is actually quite strong. Even again, if we're looking into industrials or even luxury companies, yes, China market is quite weak, but European and the US markets are relatively strong.
Okay, we'll maybe look at country by country, how you break that down. Thank you both for joining us. Morwena, Konyama, and Natalia stays with us. Coming up, a mixed economic picture out of China as policymakers ramp up stimulus to help the world's second largest economy. So we discuss a little bit more at length about the prospects for China and, of course, what it means for Europe and the continuation of earnings season. That's next, and this is Bloomberg.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. Bloomberg ETF IQ, Monday on Bloomberg. Welcome to the world of decentralized finance.
With the surge in Bitcoin, you have crypto stocks also surging.
Bloomberg's covering all things crypto, the people.
This is a political attack, and we must hold our elected officials accountable.
The transactions.
Really a record-breaking moment.
Bitcoin is the exit strategy.
And the technology.
Awareness is going to grow, and these things grow the overall industry.
Crypto as an asset class is here to stay.
Bloomberg Crypto, only on Bloomberg.
There is this real momentum from Wall Street.
We are basically deep in the European earnings season.
Take a look at how we're faring when it comes to Asian markets.
This is Bloomberg News Now.
News when you want it at the touch of a button.
Another volatile day on Wall Street. We're seeing big moves.
All eyes on Capitol Hill as Democrats and Republicans prepare.
Today's job numbers casting doubt on the Fed's next move. Inflation remains front and center. And that's news when you want it with Bloomberg News Now. Get it 24/7 on the Bloomberg Business app, Bloomberg.com, and anywhere you get your podcasts.
Bloomberg News Now. Context changes everything.
As we spend some time here on the broader presidential race.
Let's focus in on European politics.
Makes you wonder how politics might play out.
Since this year, we are faced with complex and changing external circumstances, increasing challenges and difficulties in the outside environment. The domestic economy is also upgrading and making structural transformation. So the temporary pains of these adjustments being released.
Well, the Deputy Director of China's National Statistics Bureau speaking there after the country's central bank disclosed more details of its measures to boost capital markets. Now, the announcement came minutes after authorities released figures showing China's slowdown deepened in the third quarter. Well, still with us, Natalia Lipikina from JP Morgan Private Bank. Natalia, thanks so much for sticking around. I mean, China is such a big force that it's impossible to ignore it. When you cover European equities, how exposed or how concerned should we be about this China slowdown?
Yeah, absolutely. Lots of European companies are so much exposed to China region, so we can't ignore what is happening in the region. Basically, the way we look into it is you have monetary and fiscal policies right now, and the market really needs to understand what is happening on the fiscal side. This is where the market is laser focused to understand what is happening next, and most importantly, how and if they will impact earnings, especially for the European companies.
But so what are we doing with China? Are they deporting deflation? Is there a concern if you keep on stimulating, I guess, the old sectors? The Chinese economy is never going to change to a point where it's a catalyst for the rest of the world.
Yeah, unfortunately, this is something that we're seeing in the sectors like EVs and autos, where you have a lot of competition in the market. You have the impact on the operational profits that companies in Germany, for example, have. This is unfortunate situation that Europe is now going through, and therefore, back to your previous question, why we become so selective on what we actually own within Europe.
Do you own any of the renewables, or I know you're looking at the industrial complex, but where, for example, do you put EVs and car makers?
Actually, in the industrials, we think they are probably the best positioned because they benefit not just from the electrification trend, but also from AI stimulus. If we're thinking about the big US tech companies, how they're spending their capex, this what relates to the big industrial companies coming out of Europe.
Natalia, the UK, so I mean, all eyes on October 30th when we have that budget. Is this a good investment opportunity because things look cheap?
We are quite neutral on the UK market. Reason being, it is cheap, has been cheap for a very long time, but in our view, it just lacks a catalyst. And in general, the earnings growth is not as high as in other regions. Again, comparing to the US markets, where we think earnings can grow 7-8%. That is a big number, especially thinking that it's the fifth quarter of earnings growth. I think we're just lacking that in the UK. And also, UK market is very exposed to China. So we definitely need to see the stimulus coming out of that region to become more positive on the UK market.
I mean, what do you need as a catalyst internally? I mean, can the budget on October 30th provide that, or does it need to be something bigger? Do you need to see growth?
You need to see growth, absolutely. You need to see growth internally and externally as well, because the UK market is also quite an international market. You need to see the pickup in areas like China.
Natalia, as always, thank you so much for joining us today. That was Natalia Lipikina, Head of EMEA Equity Strategy at JP Morgan Private Bank. Now, coming up, more on the geopolitics of the Middle East as Israel kills the Hamas leader Yahya Sinwar, the architect of the October 7th attack. We'll have a full roundup. We'll also talk oil. There's an important piece by Javier Blas talking about strategy in the Middle East and talking about how oil will change in the coming weeks and months. This is Bloomberg.
Names in tech are on Bloomberg.
A large number of countries are subsidizing their regional data centers
so that they could become able to build out their AI infrastructure. They recognize that their country's knowledge, their country's data, digital data, is also their natural resource. Not just the land they're sitting on, not just the air above them, but they realize now that their digital knowledge is part of their natural and national resource. And they ought to harvest that and process that and transform it into their national digital intelligence. And so this is what we call sovereign AI. You could imagine almost every single country in the world will eventually recognize this and build out their AI infrastructure.
Nobody covers technology like Bloomberg. Context changes everything. From our studios in New York and San Francisco, our expert hosts have the data and analysis about the companies you know and the startups to watch, plus the interviews you don't want to miss. Watch Caroline Hyde and Ed Ludlow on Bloomberg Technology, the only daily business show dedicated to tech, right in the middle of the trading action, every weekday, only on Bloomberg Television. Context changes everything. Bloomberg Surveillance covers the latest in global markets and the political events that influence your world. Join Jonathan Farrell, Lisa Abramowitz, and Anne-Marie Hordern only on Bloomberg. Context changes everything. Bloomberg loves earnings.
I know it's like your Super Bowl, right?
I can't wait. It's like opening presents in the morning.
All right, it will be exciting.
Nobody covers earnings like Bloomberg.
Good morning, everyone, and welcome to The Pulse. I'm Francine Lacqua here in London, and these are your top stories. Now, Israel kills Hamas leader Yahya Sinwar, the architect of the October 7th attacks, spurring U.S. calls to end the war in Gaza. But Israel's prime minister vows to keep fighting until all hostages are free. In markets, Chinese equities rally after better-than-expected GDP data and retail sales in the country as the PBOC steps up support to help prop up the world's second-largest economy. Plus, the ECB lowers rates as expected, with investors seeing another cut in December. Meanwhile, the latest U.S. economic data cool bets of Fed easing. Now, the escalating Middle Eastern conflict has also led to a shift in relations between Arab nations in the Persian Gulf. And that's the topic of our weekly must-read by Javier Blas, Bloomberg Opinion, Energy, and Commodities columnist. Now, in this piece, he says, I don't think the oil market has fully appreciated the change in tone of Saudi-Iranian relations, including the reestablishment of diplomatic relations last year after Chinese mediation and ongoing regional diplomacy. Now, for Beijing, the relationship between the two most influential Middle East nations matter. It buys more Saudi and Iranian crude than anyone else. And Javier joins us now to discuss. Javier, first of all, it's an incredibly smart piece. It's well written, and it's actually something that we don't hear about a lot. Is that, you know, because of also the demand for oil and what Russia is doing in Ukraine, this changes the dynamics on what China wants in the Middle East.
Yeah, China has been remarkably quiet for several weeks on the conflict of the Middle East, but this week they really pick up a bit of their engagement. They have a conference call between the Foreign Affairs Minister of China and counterparts in Iran and Israel. So obviously they are interested. They put together Saudi Arabia and Iran a year ago. Both sides reestablished diplomatic relationships. For Beijing, as you said, this matters a lot. They buy more crude oil from both countries than anyone else. And the tone of the relationship between the Saudis and the Iranians is so different from 5 years ago. They have ambassadors in both sides. And to me, there was a picture that it was just a photograph that was really emblematic of what we are talking about. The Iranian Foreign Affairs Minister traveled to Riyadh for meetings. You will be expected. He will be received by his counterpart in Saudi Arabia. And he was. The surprise was that he was also received by Crown Prince Mohammed bin Salman, who runs the day-to-day affairs of Saudi Arabia. And not only he was received, Saudi media released a number of photographs where were smiling, at ease. I mean, it didn't really telegraph we are enemies. It doesn't mean that they are friends, but I think that they have found a way to work with each other.
But so what unites them? I mean, is it oil? Again, you talk about the neutrality, so I don't know whether you'd call it as like frenemies. But are they is it the U.S. and actually, you know, that unites them because neither particularly likes the U.S.?
Francine, I love the expression frenemies because I think that they really express, I don't think that anyone in Saudi Arabia is just cheering from Iran in this conflict, but they are not rooting for Israel as it was in the past. The Middle East, as in many places, has been ruled by this old say of the enemy of my enemy is my friend. Therefore, Saudi Arabia was siding with Israel against Iran. I think that it unites then a desire for stability, a desire to be able to export their oil. Both sides are very interested in getting the money. Iran obviously needs it, and Saudi Arabia is in a moment where it's investing a lot and needs the money. I think that for the Saudis, there was a moment in 2019 where militias affiliated with Iran attacked the biggest processing facility, Abqaiq attack in 2009. I think that the Saudis were shocked that was possible, that they didn't even detect the drones, and they were also shocked that the United States did absolutely nothing. And that was not Biden, that was Donald Trump who was president. Donald Trump didn't want to retaliate against Iran. And that, I suppose, that changed the thinking in Saudi Arabia. Why we need to be siding with America and Israel against Iran all the time if we are going to be collateral damage? Let's put ourselves first, and perhaps a frenemy relationship is what suits us better.
But Javier, the Middle East relations have always been complicated. Are they, more complicated than ever between also Bahrain, Qatar, Saudi? Because the U.S. can't put pressure on Israel.
They have been very complicated in recent years. But again, if you look at where we were only a few years ago, 2019, 2020, 2021, where several countries allied with Saudi Arabia, and Saudi Arabia itself broke away diplomatic relations with Qatar, and we came remarkably close from Saudi Arabia actually to invade Qatar. And now both countries are again in good terms, they're working together. So the GCC countries, the Gulf Cooperation countries, are getting along better than before. Look, it is a difficult family down there. There are conflicts. I think that I will not call true friendships anywhere, but frenemies or getting along, I think that defines that, and that really changed the nature of the conflict.
Would China benefit from a wider-ranging war in the Middle East?
No, China will be one of the losers of any war on the Middle East. It really imports more oil than anyone else in the planet. It imports a lot of crude from Saudi Arabia and Iran, and in the case of Iran, Chinese refiners are purchasing around 90% of all the Iranian oil exports, and they are doing it under discounts because Iran is under sanctions, and therefore they struggle to sell their oil. The Chinese know that they can get oil at, say, $10, $15 discount, sometimes less, maybe $5 discount. That's great for China.
Javier, we're just getting some live pictures of President Joe Biden arriving in Berlin, meeting with the German President Frank-Walter Steinmeier at the Bellevue Palace in Berlin. Now, Joe Biden will then be awarded the highest civilian honor by the German president. Cooperation on Ukraine, the Middle East crisis, were also high on the agenda. I was struck just 10, 15 days ago when Joe Biden spoke about possible hitting Iranian infrastructure, oil infrastructures. What's that about?
Well, we know that the discussion was real. The president, I don't know if that was an intended signal to the market, or he just make a mistake and disclose something that perhaps he should not have said. So we know that the Israelis were having a real discussion about hitting Iranian oil targets. What we don't know is why. Were really intended to do it, or were signaling to the U.S. we are prepared to do this, to let the U.S. convince Bibi Netanyahu, please don't do that. That will be too much. And in exchange, he got concessions somewhere else, including perhaps anti-ballistic missile batteries from the U.S., which had been delivered. So we don't know exactly, but it's true that for the first time, we have here the U.S. admit the Israelis are seriously thinking about hitting Iranian oil. That is a significant escalation.
It is an escalation. I'm still surprised that actually the price of oil moves a little bit, but it has moved that much. I know there's shale, I know there's the U.S., but actually the energy complex seems to have shifted so much that they don't really take into account real geopolitical risk.
Well, the sentiment has changed. We have a lot of spare capacity, true, mostly in Saudi Arabia, which can be affected. But to me, there are two things that have changed. We have had a number of disruptions in the past that really were resolved earlier than expected. The market has learned from that. The market is more resilient. And also the development of the options market allows everyone to buy insurance cheaper rather than having to take a directional bet on prices. Don't get me wrong, buying options also influence the price of oil, but it's not the same. And I think that the market is taking a stride. And then the context matter. In previous crises, we were with very strong demand. The Chinese economy was booming. We are going into 2025 with weaker economic growth, weaker oil demand growth, and a Chinese economy which is still growing at 5%. I mean, many European countries will sign today 5% for the next half a century. I mean, we are seeing President Biden arriving in Germany. Germany will sign.
Would do anything for that.
Yeah, absolutely. But it's not 10% that we were used 10, 15 years ago in China.
Javier, thanks so much. As always, Bloomberg Opinion, energy and commodities columnist Javier Blas. Now, world leaders have called for Israel to end the war in Gaza following confirmation that the Hamas leader, Yahya Sinwar, has been killed. It comes as President Biden, live pictures there, visits Germany with the Middle East high on the agenda. So let's bring in Bloomberg's EMEA News Director, Roz Matheson. Roz, what will you be watching out for in the next couple of days?
Well, obviously, we're watching a number of things within the region itself and beyond. And one of the first things is, what does this do for the war inside Gaza? What does it do with the push towards getting those ceasefire talks resumed, those talks around the return of the Israeli hostages? What does it mean also for the fighting that's going on between Israel and Hezbollah, another Iranian proxy group in Lebanon? And that's that widening Middle East conflict that we're seeing in general. On top of that, are we still going to get the Israeli retaliation against Iran for the recent missile strike that Iran did against Israel? So a lot of moving parts there that it's very unclear where that all heads. You know, does Israel push on with all of those regardless of the death of Sinwar? And beyond that, with the arrival of the US president in Germany today, we're seeing France and the US particularly push heavily for the resumption of ceasefire talks in Gaza, and saying this is a moment to reset. You've weakened Hamas. Sinwar's an example of that. Can we now find a moment to sit down and talk again about that ceasefire and a path forward towards ending the war in Gaza? But equally, is that going to be something that Israel and Hamas are going to entertain? It takes both of them to agree for that to happen, and it's unclear whether either would agree to that. So what you're going to see is Joe Biden in Germany today pushing hard on the Middle East, also pushing hard for continued support on Ukraine, another key reason why he's in the region.
But, Roz, what would it take for the Prime Minister of Israel actually to agree to a ceasefire? This seems like a good opportunity.
Well, it does. And obviously Israel is saying this is a win for them. And it's something that Netanyahu had said was his goal. One of his goals was to actually kill Sinwar as the architect of the October 7 attack on Israel. But more broadly, he has said his goal is to degrade Hamas so it can never again attack Israel. Hamas is still there in Gaza. Israel is still fighting them in Gaza. This is a nebulous sort of group that exists without its leadership, potentially. And have you really weakened it enough to make that point? So is that goal achieved? We saw from Netanyahu yesterday, he says the war will continue. So perhaps they will agree to have those two-track things going. You do have ceasefire talks that resume maybe in Doha, but there's no immediate signal that Israel's going to slow down here.
Roz, thanks so much. Bloomberg's EMEA News Director, Roz Matheson. Coming up, Black workers in the City of London say inclusion is no longer a priority. We'll look at why diversity efforts appear to be stalling. That's next, and this is Bloomberg.
This is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia. We'll walk you through what you need to know to kickstart the European Trading Day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in every weekday at 6 a.m. London time, only on Bloomberg Television.
Middle East and Africa. Vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
The countdown is on. Everything you need to get the edge at the end of the market day.
Big tech earnings kick off later this afternoon.
Gilead is coming out right now.
We have take two numbers. Back to the markets, right? Our bread and butter.
NVIDIA is one of the best stories in the tech space.
That actually matters a whole lot more.
It might shock some of your viewers.
You're watching The Close.
Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
The conversations that matter, the insights you need. This is A Pulse, and I'm Francine Lacroix here in London. Now, black workers and diversity practitioners in the City of London have told Bloomberg that corporate priorities are shifting away from diversity. The UK's financial services sector had pledged to boost representation in the wake of George Floyd's death. But 4 years later, progress remains uncertain. Well, Bloomberg's Tiwa Adebayo joins us with the very latest. Tiwa, thank you for joining us. I mean, we've seen basically this pushback against DEI in the US. Is it a similar situation here in the City of London?
Well, yeah, as you mentioned, in the US, it's really legal and regulatory pressures that companies are facing. But what's happening here in the UK is that pressure is coming from firms themselves. So they're pulling back on diversity-focused initiatives and recruitment schemes, and it's having an impact on black workers in the city. That's what they're telling me. But I've spoken to a number of diversity, equity, and inclusion professionals, and what they're saying is that there was this impetus for change in 2020, and perhaps some firms felt rushed to make those changes, and now we're paying the price for that, and we're seeing that the schemes are not perhaps giving the results that many of those firms desired, and as a result, they're reassessing those commitments, the investments that they made as well, and we're seeing a pullback.
Tiwa, why the shift?
Well, the shift is really being driven by perhaps the fact that these strategies aren't fit for purpose. That's what I heard from the likes of Mark Lomas, for example, who is the head of culture at Lloyd's of London. He said to me that to get lasting change, you really need to make a concerted and targeted effort. And because that's not happening, what we can see is that black people are leaving the city, for example, at a higher rate than their white counterparts. They're not reaching those top levels. For example, in UK law firms, black people are 4 times more likely to leave than their peers. So there's a high attrition rate, and it's being driven by this drawback that we're seeing from firms.
So, Tiwa, what does it mean for black workers?
Well, it means a number of things. I spoke to some workers who report feeling abandoned after initially joining through these diversity-focused schemes, and they feel there isn't that set-out path for progression that they need really to feel supported. They're speaking of a number of different changes, so subtle things like perhaps fewer Black History Month events, fewer networking events, but also hostile working environments and managers that aren't trained adequately to deal with diverse talent.
Tiwa, thank you so much. Tiwa Adebayo there with the very latest on some of the scaling back of these diversity initiatives. We also actually did a podcast together this week called In the City. It was out yesterday. I would suggest everyone go and listen to it because it's 20 minutes and we really take our time in explaining also some of the way forward. Coming up, you're looking at live pictures of the U.S. President Biden, of course, arriving in Berlin there with the President of Germany. We'll have plenty more on what this means for transatlantic relations ahead of that November 5th vote. This is Bloomberg. From the beating heart of global finance, economics, and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this a new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacroix, and this is The Pulse, every weekday only on Bloomberg.
U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers jobs day like Bloomberg.
Good morning. Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
This is Bloomberg Technology.
This is the Asia trade.
You're watching the close.
Welcome to Balance of Power.
This is Bloomberg. Welcome to the world of decentralized finance.
With a surge in Bitcoin, you have crypto stocks also surging.
Bloomberg's covering all things crypto, the people.
This is a political attack, and we must hold our elected officials accountable.
The transactions.
Really a record-breaking moment.
Bitcoin is the exit strategy.
And the technology.
Awareness is going to grow, and these things grow the overall industry.
Crypto as an asset class is here to stay.
Bloomberg Crypto, only on Bloomberg.
Bringing you up-to-the-minute financial news whenever and wherever it happens. I'm Michael McKee at the Federal Reserve, and this is Bloomberg.
Now, U.S. President Joe Biden is in Berlin ahead of being awarded the highest civilian honor by the German president. Now, cooperation on Ukraine and the Middle East crisis are also high on the agenda. Let's get more with Bloomberg's Oliver Crook, who's in Brussels. So, Ali, good morning. Biden's arrival comes just after Israel announced the killing of Yahya Sinwar, the leader of Hamas and the mastermind of the October 7th attacks. So that's going to be high, if not top of the agenda.
Yeah, absolutely. And I think that the sort of hope for many of these leaders in Europe and Biden, and as we heard from candidate Harris as well, is that this sort of opens the possibility of potentially an off-ramp for slightly beginning to de-escalate the situation within Gaza and the south of Lebanon. Remember, earlier in the week, here in Brussels, we had the meeting between the GCC leaders. You had Mohammed bin Salman, the Crown Prince of Saudi Arabia, meeting with EU leaders. And they really came out with a sort of joint statement to ask for a sort of ceasefire in Gaza and in southern Lebanon. That seemed like a very remote prospect earlier in the week. This is beginning to feel like it may be a little bit closer after Israel has achieved at least one of the two aims it needed to achieve in order for it to be able to say that its operation was successful. The second, of course, is going to be the return of the hostages, which they have not yet been able to bring home. Where things get interesting for the Quad meeting, where you have Scholz, Macron meeting Biden, as well as Starmer, is you have sort of opposition in terms of where Macron and Starmer sort of sit on the issue. You have Scholz and Biden, who have been much more permissive of Benjamin Netanyahu and how he has sort of gone about it. So it'd be very interesting to see if they can come to a sort of joint statement on that and sort of forge a path forward in a sort of post-Sinwar world.
Ali, on the EU leaders meeting in Brussels, I mean, there's not much actually to go by, but what did the debate center around?
Yeah, so listen, I think that one of the main issues that we had here was for President Zelensky was it was very hard for his message to cut through and his victory plan with the EU leaders here, particularly ahead of the U.S. election, because the leaders here realize that no matter, depending on the outcome of what happens in the United States, they're going to have to rewrite their Ukraine policy to deal with that sort of reality. We should say that Biden arrives in Berlin with a sort of new package of 450 million euros of additional support for Ukraine, but that was really sort of one of the issues that maybe didn't get the prominence that Zelensky wanted. The issue that did get prominence, Francine, and this is going to be something we're going to be talking a lot about in the months to come, is the question of migration within Europe. You've had a lot of debate over it. You have seen a much harder line from the Europeans on how to deal with migration. We have Giorgia Meloni really wanting to make herself the sort of poster child in terms of how to deal with immigration in Europe, sending migrants, as she did for the very first time this week, to Albania, a third sort of party country, to deal with the question of migration. And there's also the question of, Poland sort of basically saying that they're going to halt their asylum system right now because they say on the Belarusian border, the Russians are sort of weaponizing immigrants to try to create division within the EU. And really what we got from this meeting is a much harder line, even from the sort of liberal Democrats and the sort of more socialists. So we're going to see that continue over the next few months, Francine.
Ollie, thanks so much. Oliver Crook there in Brussels. Now, let's also turn to one of the big corporate stories in the U.S. this earnings season. Netflix shares higher pre-market. That's after the streaming giant actually beat Wall Street's expectations in every major metric, despite challenges from last year's strikes in Hollywood. Well, Bloomberg's Charlie Wells now joins us. I mean, I just can't stop thinking about the perfect couple. I mean, they're doing quite a lot more, but honestly, like, you know, what's it down to?
Yeah, I mean, content, as you say, is part of it, right? Like, they're producing shows and programming that people want to watch. They're pivoting into live programming, which is something that could help on their ad front. But really what Netflix has been able to do over the past few quarters, and this one in particular, is to show that they can still get revenue from that password clampdown, but also that pivot to an ad-supported tier for that consumer who wants to spend a little bit less.
I mean, live, it's mainly sports events, I imagine.
Live, it's mainly sports events. We've got some NFL games that are coming up on Christmas Day, and the goal there is to create revenue, and to create revenue, of course, but also inventory for advertisers. But this is proving a little bit more difficult, and analysts want to see this to bring in some material financial gain for Netflix. It's going to take a little while for that to build out.
If they want to stream the pulse, let's talk. 1 week into the third quarter earnings season in the U.S. How's it going?
A lot riding on this season, a lot more attention focused on earnings than a lot of other quarters. And so far, 67 companies in the S&P 500 have reported. 76% have had a positive upside surprise on earnings. So it's going pretty well, but the bar had been lowered significantly by executives and also analysts.
I mean, I guess what people really want to know is the U.S. consumer is holding up, and they are.
This is that. I mean, we've been getting that read, you know, we're kind of in the financial part of earnings season, and a lot of bank executives have been talking about that consumer holding up.
And then Black Friday is going to be a big one, right?
Of course,
All over Black Friday.
Yes, exactly. And they spend. Are they going to keep spending? Let's see how they go.
Thank you so much, Charlie Wells there with the very latest, of course, on Netflix, but the earnings season also in general. Now, this is the playbook. Joe Biden in Germany. We just saw live pictures where he's due to meet, where he's also meeting Olaf Scholz a little bit later on. Keir Starmer and Emmanuel Macron. Then at 1:30 p.m. UK time, there are U.S. housing starts. Again, there's been a little bit of a shift when it comes to Fed cuts. That's on the back of some pretty strong data out of the U.S. And then we hear from a number of Fed speakers. Neil Kashkari, Christopher Waller, and Raphael Bostic are all speaking. Now, looking ahead to next week, a few programming notes. I'll be sitting down with the ECB President, Christine Lagarde. That's Tuesday, 3 p.m. UK time. Also on Tuesday, a conversation with the ASML Chief Executive Officer as part of the Bloomberg Tech Conference that you can catch at 9 a.m. UK time. China Central Bank moving to support markets just as data showed the economy expanding the least in 6 quarters, signaling that the government's intent to continue a stimulus push to draw a line under the slowdown. Up next, Bloomberg Brief with Danny Berger. This is Bloomberg.
What legacy I would love to leave is to make sure that in my village I have infrastructure. So long when I'm gone, things are still working. Then I have done my job. And if some people get inspired through my work and then try to engage themselves for their community and create something that is inspiring for everyone, I will be happy.
What's the best piece of advice you would give to someone young who wants to make a difference actually in this world? In architecture or with something else?
Wow. I'm not the right one to just do that.
I think you are.
Yeah. But with the pressure you have, and then you try to be the good one, the fancy guy, the intellectual one, I have no advice then to believe in yourself and really work hard. You know, when I started, no one would have imagined that I will be able to see my name connected with Aga Khan or Pritzker or sitting at Bloomberg to talk about sustainability, about future of sales. No, myself 5 years ago, if you told me that, I will say no. I will never imagine. So I will encourage everyone to believe in what you're doing and not try to run after the newest of the newest. Just be consistent. Just work on things that matters for you. Really, at the long term, it pays.
This is Bloomberg News Now.
News when you want it at the touch of a button.
Another volatile day on Wall Street. We're seeing big moves.
All eyes on Capitol Hill as Democrats and Republicans prepare.
Today's job numbers casting doubt on the Fed's next move. Inflation remains front and center. And that's news when you want it with Bloomberg News Now. Get it 24/7 on the Bloomberg Business app, Bloomberg.com, and anywhere you get your podcasts.
Bloomberg News Now. Context changes everything.
Bloomberg covers the world with unmatched reach and resources. From more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg, context changes everything. Get your fixed income fix. Watch Bloomberg Real Yield every Friday right here on Bloomberg. Context changes everything.
Good morning from our global headquarters in New York. I'm Danny Berger. Managed Cranny is off. Welcome to Bloomberg Brief. Let's set your agenda. Doubting the cuts, a string of hotter U.S. data pushes 10-year yields beyond 4.1%. Pressing Netanyahu, President Biden says it's time for a ceasefire in Gaza after Israel kills the leader of Hamas. And a big tech bonanza. Sales of Apple's newest iPhone soar in China. Netflix earnings blow through estimates. The story yesterday was one of stronger data. It made the S&P 500 lose momentum, but the momentum seemingly back this morning. S&P 500 futures up 0.2%. NASDAQ 100 leads after signs that Apple sales of their iPhone in China up 20% year over year. For this bond market, 10-year yields creeping ever so slightly higher, just 1.5 basis point this morning, pushing above 4.1%. That is the highest level for your 10-year yield since August. Gold also at another record, $2,706. So after the Fed's 50 basis point cut, we've just had weeks of strong data. First, it started with that hot jobs report. CPI then comes above expectations, completing the trifecta with solid retail sales yesterday that showed resiliency. All of this led to the Atlanta Fed's GDP Now tracker moving to 3.4%. That is the highest so far of this quarter. Joining us now is Adam Posen, president of the Peterson Institute for International Economics. Adam, thank you so much for joining us this morning. You've been saying for some time
Thanks for having me.
that the Fed is not going to be able to cut as much as most have thought. With this recent strong data in hand, Adam, how likely is it that we won't get any cuts for the rest of this year?
Oh, I think we're going to get a cut in November and almost certainly a cut in December, Danny, 25 each. There'll be some more dissents maybe, and it'll be a three-way vote, which is unusual for the Fed. But or if Powell wants to prevent that, he may skip December. The issue's more that Powell and a lot of the FOMC were guiding or accepting markets pricing in continued cuts further in 2025, and that, where you and I have been talking over the last few months, that's not going to happen.
Right. So 2025, we won't get as many cuts as the market has been guiding. Adam, I still really want to understand the risk of a hike, because this is something you've been really good on, that there is this risk of a hike in 2025. How soon could that appear?
I think it has to wait until March or April at the earliest, because it will be heavily dependent, Danny, on the budget of the federal government. Essentially, part of what the Fed and most market expectations are is that you'll have a split Congress, and that split Congress will stymie budget expansion, further deficits, and so on. I don't think that's right. I mean, you may get a split Congress, but I don't think that either a Harris or a Trump administration is going to end up doing no change in fiscal policy. If anything, it'll get bigger deficits, especially under Trump. So I think by June, especially if it's Trump, there's a good chance the Fed is hiking. But I feel by April, it's going to be very clear they're not cutting.
Adam, I want to get more into the politics and the consequences of them in just a moment. But just taking a step back and a bigger view, this is an economy that keeps surprising us to the upside. It has been the consistent theme for 2024, even since last December, with the large amount of cuts that are getting priced in. And again, at every turn, it is a stronger economy. Adam, why do we keep getting this wrong? What are we missing?
There's a getting the economics wrong and there's a failure to reprice. So you got two things going on. I think the failure to reprice is in part due to the Fed. The Fed has not been communicating in a way that suggests that there were risks on both sides. I mean, by last spring and certainly by this summer, the Fed was very loudly saying almost all the risks were on the unemployment side and on the downside. In terms of getting the economy wrong, I feel like people have given short shrift to how much of a boost we got from productivity and inward migration. And they just, for some reason, kept discounting any labor market data that wasn't the unemployment series. And both of those, I think, were bad ways to do your forecast.
Well, Adam, that brings us to the politics of it all, because as you point out, there is a risk of curtailing immigration, not just curtailing it, but deporting folks to in a Trump presidency. You had this great piece in Foreign Affairs magazine this morning. Let me just read it to our audience, the title of which, The True Dangers of Trump's Economic Plans. Any short-term benefits gained by driving a hard bargain in bilateral negotiations or in a given industry would be vastly outweighed by the macroeconomic costs of generating uncertainty. Adam, you mentioned why people don't think this is the case, the idea of a split Congress. Maybe Trump surrounds himself with smarter people, and therefore this isn't as big of a risk. Right. Why are some of those softenings of concerns about Trump wrong?
I mean, it's a matter of forecasting, even though it is political, Danny. And a couple key facts. First point is, there's never been a president who's come in elected, had a program that he said he wanted or she wanted to do, and then not pursued it. It literally has not happened, at least not in the last 100 years. So the idea that, oh, they're just politicians and he's just talking is completely out of experience. Second, we know from Trump himself, even though the policies he did during Trump 1.0, or his first term, were nowhere near as bad as what he's proposing to do, he did carry them all out, and he stuck with them, whether it was tax cuts that didn't generate growth in revenues, whether it was a China trade deal that made no difference to the China trade balance. He stuck with them just throughout, even when the evidence went the other way. And then the third point, and this is the key point, is there are a lot of smart people or people who think they're smart who say, oh, this is all just a negotiating tactic. Trump is just going to say these things and force the Democrats in Congress or force the Chinese or the Russian or the Japanese or the German government to cave in. The problem is that might work in certain situations in foreign policy where you're dealing one-on-one with somebody who controls an army or controls a government. But in markets, you're dealing with millions upon millions of people. And so even if you get the government you're sitting across the table from to concede, you're creating uncertainty. That's the quote you kindly read. And that has spillovers. It's like poison gas. If you launch it on your enemies across the battlefield, it may just blow back on you. And by the time they end up launching poison gas at you, I mean, I hate to use this image, but I mean, either way, your troops themselves get constrained, get worn down, get demoralized. In the end, it's not enough to act sophisticated and say, oh, it's just a negotiating tactic, because the threats have to be credible. And perversely, if all the big investors say, well, Trump's not really going to do this, it's more likely he's going to have to deport a bunch of people, more likely he's going to have to put on tariffs, because otherwise his threats are empty and they'll be ignored.
Adam, I think you point out something that people often forget about the first Trump presidency, that policy was kind of handed down through Twitter at the time. It was often confusing and often disjointed. You've already seen things like Qualcomm delaying any talks with Intel about a takeover because they want to wait for the presidential election. In this economic cycle, with the Fed cutting, if we do get this era of uncertainty, what do you expect in terms of business plans, how the business community reacts? Will there be something of a slowdown, less spending, less plans being made because of this uncertain environment?
Absolutely, Danny. And again, I mean, there are things the Democrats can do. I mean, part of what Qualcomm is reacting to is the antitrust policies that the Democrats are talking about putting in place. So, you know, there are more than one factor. But you're absolutely right that the fundamental issue is if you have a government that's busy making threats, that's busy constraining the supply side of the U.S. economy, letting us have less workers, less inputs, less consumer goods, less foreign funding of our debt, that's scary to business. And so, no, it's not capital flight. We're not Argentina. But the U.S. then would have fewer deals, less investment at home, and less growth.
Adam, you're in Berlin. I just want to end it on Europe, and not unrelated to this. Europe not only facing a weaker economy, inflation below 2%, but also the threat of tariffs, the threat of trade disruption of Trump. Could it be in a year's time we're talking about serious disinflation and weakening growth in Europe?
I think it could be, especially since the places that are already weak this year, notably Germany, are some of the ones that are most vulnerable to further trade tensions. This is why we see the split amongst the Europeans on how to approach the issue of Chinese EVs. I think in the end, it'll work out better for Europe than perhaps for the U.S., and that's what our simulations show, because Europe will gain, frankly, at the U.S. expense in terms of trade opportunities, investment opportunities, capital flows, if the U.S. is busy messing itself up, as it would be if Trump gets in and does what he says he's going to do.
Hey, Adam, thank you so much for taking the time out of your Europe trip to talk with us. We're going to have to leave it there. Adam Posen of the Peterson Institute for International Economics. Wonderful as always. Okay, let's get you some other top stories that are trending on the terminal this morning. Sales of Apple's latest iPhone are up 20% in China in their first 3 weeks versus the 2023 model. Data from Counterpoint Research shared with Bloomberg show that consumers are still shifting to the pricier models. The top-end Pro and Pro Max are up 44% versus their predecessors. Data this morning showed a deepening slowdown in China last quarter. Minutes after that release, the PBOC shared more details of its measure to boost capital markets, signaling that Beijing intends to continue its stimulus push. Separately, the PBOC governor flagged real estate and the stock market as key economic challenges requiring policy support, and thus you see China equities rally into the close. Netflix beat expectations last quarter, delivering 5 million new subscribers and surpassing Wall Street estimates on every major financial metric. The streaming giant saw sales grow 15% despite a programming slate constrained by last year's strikes in Hollywood. Many analysts think that Netflix, though, is just riding a boost from cracking down on password sharing, which will only be temporary. Coming up, Israel kills the leader of Hamas. President Biden calls for the conflict to wind down. We're going to bring you the latest out of the Middle East. And markets rolling back their rate cut bets. We're going to discuss with Kashi Jones of Charles Schwab. Stick around with us for that conversation later in the hour.
Is on. Everything you need to get the edge at the end of the market day.
Big tech earnings kick off later this afternoon.
Gilead is coming out right now.
We have take two numbers. Back to the markets, right? Our bread and butter.
NVIDIA is one of the best stories in the tech space.
That actually matters a whole lot more.
It might shock some of your viewers.
You're watching The Close.
Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
Authorities.
Could face bigger challenges next.
Fed was going to keep rate World Cup. This is a 3
as the economic picture.
Covering the intersections of Hollywood, Silicon Valley, and beyond.
This is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia. We'll walk you through what you need to know to kickstart the European trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in every weekday at 6 a.m. London time, only on Bloomberg Television. Season is here.
I think that this earnings season is going to be so important.
Bloomberg is first to break the numbers.
NVIDIA earnings now crossing the wire.
Bank of America, the retailer Five Below.
There is something for everybody.
With the smartest insights.
Weaker inflation is not great for earnings.
I think the consumer's a bit more resilient.
You've had earnings recessions flow through growth and then cyclicals and defensives.
Earnings cycle continues on Wall Street.
Continuing coverage on Bloomberg. Context changes everything.
It's your Bloomberg Brief on this Friday morning. I'm Danny Berger in New York. Israel says it will continue fighting the war in Gaza, even after the death of the Hamas leader Yahya Sinwar. Here's what Israeli Prime Minister Benjamin Netanyahu had to say.
I'm standing before you today to inform you that Hamas leader Yahya Sinwar has been eliminated. The person who committed the most terrible massacre in the history of our nation since the Holocaust, the mass murderer who murdered thousands of Israelis and kidnapped hundreds of our citizens, was eliminated today by our heroic soldiers. And today, as we promised to do, we settled the account with him. Today, evil has suffered a heavy blow, but the task before us is not yet complete.
President Biden, meanwhile, wants the killing to provide an off-ramp for the conflict that has raged on for over a year.
And further that now's the time to move on. Move toward a ceasefire in Gaza.
Joining us now is Bloomberg's Middle East breaking news editor, Patrick Sykes. Patrick, how likely does it seem, as Biden wants, that the killing of Hamas's leader could get us closer to a ceasefire?
Hi there. Yeah, I think it does bring us closer in that it seems this is probably a prerequisite for Israel to, a target to take out. It's hard to imagine they would have let a resolution happen and that saw him walk free. But that's not to say it's imminent. You saw in the clip there from Netanyahu, he said the task before us is not yet complete. He later said yesterday, this is the beginning of the end. So I think it had to happen from the Israeli perspective militarily in terms of closure after the events of October the 7th. But the fact that, the US is leaning on them now so hard just indicates that I think it's not a given that will automatically happen. It's going to require some hard diplomacy from the US side, and it's going to require, I think, some compromises from at least some of the Israeli policymaking community.
Patrick, thank you so much for that update. That is Bloomberg's Patrick Sykes in Istanbul. Now, back here in the U.S., we're in the final 18 days before the election. The candidates are making every appearance count, as to the ones that they're doing. Democratic nominee Kamala Harris chose not to attend the Al Smith Memorial Foundation dinner last night in New York. Her opponent, Donald Trump, was critical of her absence.
My opponent feels like she does not have to be here, which is deeply disrespectful. The last Democrat not to attend this important event was Walter Mondale, and it did not go very well for him. He lost 49 states and he won one. So I said, there's no way I'm missing it.
Joining us now for the latest on the race is Bloomberg Government's White House reporter, Kate Ackley. Kate, it's a weird one because Harris didn't show up to this dinner, as Trump so noted, but Trump has also turned down different interview requests from the likes of 60 Minutes, from CNBC. What do we make of the way that these candidates are picking and choosing the different appearances that they're doing?
Well, Vice President Harris did send in a video. So she had an appearance, but by a video link. And, we know that former President Trump has said he doesn't want to do another debate. So you're right. They're kind of navigating this, deciding to be in battleground states at certain times or take time off the campaign trail or not. Vice President Harris was in Wisconsin yesterday while Trump was at this dinner in Manhattan.
Kate, how is the outreach going to voters that they see as kind of critical to getting the type of win that, for example, Biden had. And I'm thinking here of Latino voters. We've heard Barack Obama speak explicitly to black men about their need to vote for Kamala Harris. In what ways are the candidates trying to go after these two specific demographics, and have we seen any movement on it?
Well, there have been specific policy proposals, or at least outlines. Vice President Harris put out something in recent days that was meant to appeal to black men voters, sort of economic, and also some other proposals as well. So, you're seeing both campaigns try to appeal to men voters, Latino voters. I think former President Trump said something last night about the men that were voting for him during the dinner. So you see them both trying to appeal to that. But where they're going to be today is in, the Midwest, the battleground state of Michigan. Trump and Harris will both be there today. It gives you an indication of how important that swing state is in these final weeks.
Kate, before we let you go, we were just talking with Patrick Sykes from our bureau chief there on the conflict in the Middle East of Israel killing the Hamas leader and Biden doing this extra push for a ceasefire. How does this change this topic, this contentious issue for this election for the two candidates?
Well, Vice President Harris said yesterday at a campaign appearance in Wisconsin that this was, the opportunity for this ceasefire to occur. And as your, previous guest, and you had the clip from Netanyahu showed, it's not necessarily going to be immediate. There's not, immediate agreement that it would end. But that was her point yesterday. And we'll see how this goes over the coming, did you say it was 18 days? But who's counting?
Who's counting? 18 days, Kate. Somehow it's here. It's almost here. It's wild. Kate Ackley of Bloomberg Government, thank you so much for joining us this morning. Okay, it's 5:20 a.m. here in New York. S&P 500 futures, after a day where they just ever so slightly sank into the close, are heading higher this morning, 0.2%, led by tech, led by Apple. Sales of their iPhone 16 up 20% versus last year in China. Your dollar, that is weaker this morning, down 0.2%, with treasuries higher yet again, up a basis point. We're just above 4.1%. It's been a string of hotter data. It's been repricing, but it's also been good for risk. IG spreads at their tightest since 2005. Bank of America notes in their flow show this morning that cash is coming out and it's going into both bonds and stocks. Okay, coming up, President Trump blames Ukrainian President Zelensky for the war with Russia. We're going to have your front page news next on your Bloomberg Brief.
I think this will probably go down in history as one of, if not the largest financial crimes ever.
I cannot imagine a scenario where $8 billion just disappears.
Bankman-Fried has pled not guilty to multiple fraud charges.
Sam was just too important in the crypto community.
When someone says, I'm going to give $1 billion in the next 2 years, like that catches everybody's attention.
As time went on, their ideas got weirder and weirder.
I don't think he even had almost a conception at some point that it was wrong or right. I think he just had the mentality that he has to win.
This committee will not stop until we uncover the full truth behind the collapse of FTX.
So, Mark.
Are you in?
I'm in.
I'm in.
We're in.
Will this be the last of its kind? No. This is the nature of capitalism. Get over it.
There is this real momentum from Wall Street.
We're basically deep in the European earnings season.
Take a look at how we're faring when it comes to Asian markets.
From the beating heart of global finance, economics, and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future for inflation? Is this new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacroix, and this is The Pulse, every weekday only on Bloomberg.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Onim, only on Bloomberg.
It's your Bloomberg Brief. Danny Berger here in New York. Let's get you some front page news. A look at what's making headlines around the world. Starting off with the Washington Post, they have this, that Trump says Zelensky should never have let that war start. Former President Trump called the Ukrainian president one of the greatest salesmen he's ever met and said that war's a loser. Trump was speaking in a podcast interview. Next up, the Financial Times says that the U.S. charges Indian official over thwarting New York assassination plot. Federal prosecutors charged a man with trying to orchestrate from abroad an assassination on U.S. soil. That charge comes days after Canada expelled 6 Indian officials and accused them of working to target South Asians on Canadian soil. And in the New York Times, in Germany, Biden is preparing for a farewell visit to a key ally. Biden will meet with Chancellor Scholz in what would be the last Europe trip of his presidency. He'll also be meeting with French President Emmanuel Macron and UK Prime Minister Starmer in a multilateral meeting. Here's some of the images of him and the president of Germany. Biden will also be receiving the Grand Cross of the Order of Merit. That is Germany's highest honor reserved for heads of state. He's only the second U.S. president to receive the award after George H.W. Bush. And again, he is currently there in Germany. Okay, a quick check on your bond market this morning. It's the day after an ECB cut where Christine Lagarde didn't rule out a 50 basis point cut to come. Is it a new pivot to a faster signal? So you can see the difference there. 10-year yields lower in Germany, higher in the U.S., just barely. We're back below 4.1%. Coming up, 3 hot economic data prints since the Fed's jumbo cut. We're going to speak to Kathy Jones of Charles Schwab.
we spend some time here on the broader presidential race.
Let's focus in on European politics.
Makes you wonder how politics might play out.
U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers jobs day like Bloomberg.
From our global headquarters in New York, welcome to Bloomberg Brief. I'm Danny Berger. Let's set your agenda. Doubting the cuts, a string of hotter U.S. data pushes 10-year yields beyond 4.1%. Pressing Netanyahu, President Biden says it's time for a ceasefire in Gaza after Israel kills the leader of Hamas. And a big tech bonanza. Sales of Apple's newest iPhone soar in China. Netflix earnings blow through estimates. All of that leading to a stronger pre-market session for tech this morning. NASDAQ 100 futures leading the pack, up 0.4%. Similarly, though, Russell 2000 futures up the same amount. S&P up 0.2%. It was weakening stock momentum heading into the close of yesterday. It's been this push and pull of tech. First, TSMC helps boost everything. Then we get stronger data, which sends yields higher, which dampens the rally that we ultimately saw. Here's where your bond market stands this morning. 2-year yields, little change really across the curve. We've come back down from that 4.1%. We did see, though, 10-year yields hit their richest level since August. Fed funds futures only pricing in now 40 basis points of cuts this year. Gold, you can also see at the bottom of your screen, that is at a record. $2,711 an ounce. Maybe it's on haven buying. There is Biden calling now for a renewed push for a ceasefire. Meanwhile, we did get the newest flow show from Bank of America. Let me just take you through some of these lines, because we have long said that there is this reinvestment risk for this bond market. We're going to catch up with Charles Schwab in just a moment, Kathy Jones there about this, but so many people have said, look, there's a reinvestment risk. Yields are going to be coming down, and you're going to miss out if you're not invested. Well, it seems like some people have finally heeded that call. Latest Bank of America flow show showing that cash had the biggest outflow in 12 weeks. Where did it go? It went to both bonds and stocks. Bond funds drew the biggest inflow since October 2020 at $23.2 billion. Gold, biggest inflow in 12 weeks at $1.2 billion. Stocks also had some inflows too, but it's notable. We finally had bond yields go back to 4%. Out of cash we go and into bonds. So finally, people are listening to that. Just the last thing to notice, IG bonds, also their biggest 5-week inflow since September 2020. The spread on bonds has gotten so thin. Investment grade bonds yesterday moving to the thinnest spread since 2005. Risk is well and alive in this market, but are we pricing in the odds of a contested election? What will that look like? Just want to point out, we are seeing President Biden speaking in Germany. He is receiving the Grand Cross of the Order of Merit. You can't see it, unfortunately, because people are blocking him, but he has a little lapel on his jacket there, which is that award. It's the highest one that you can receive as a non-citizen of Germany. He is only the second president. Oh, there you can see it right there. He is only the second president to receive this. The last one was George H.W. Bush. So Biden on his tour, his final tour to Europe of his presidency. Meanwhile, we've heard him again call for a ceasefire with Israel in Gaza after the killing of the leader of Hamas. I just want to take you again to this equity market because I want to show you what's happening pre-market. We've had two pieces of news that are boosting tech stocks this morning. One is Apple. Apple shares pre-market are higher by 1.2% after boosting China sales of their iPhone by 20%. Again, as I mentioned, the big risk perhaps in all of this rally is what happens after the election, what happens after November 5th. And on that, investor Ray Dalio warned that the U.S. may not see an orderly transition of power after the presidential election. When asked about the chances of the results being disputed, he said, quote, "If it's a close Trump loss, I would say it's almost an even probability. Trump wins, it's a different story. If you put the two together, maybe a 1 in 3. All to say that there is an outsized risk of a contested election. Joining us now is Kathy Jones, Chief Fixed Income Strategist at Charles Schwab. Kathy, really wonderful to see you this morning. Look, a lot of digital ink has been spilled about the risk to this equity market if there's a contested election. What do you expect to happen to bond markets if it's not immediately clear who the next president of the United States will be?
Yeah, it's going to be probably volatile, but I can't say directionally. I would know which way to go with a contested election. I think for the bond market, the bigger issue is what happens with Congress and with fiscal policy after the election, and that's not going to be known if it's contested. So I would expect a certain amount of volatility. You might even see bonds rally, treasuries rally on a flight to safety as people seek a safe haven away from the turmoil. Really hard to say. I think we're all prepared for this taking a while, one way or another, that it might take a couple of days or even a week. So maybe the market's prepared for that. Really tough to say.
Kathy, to that point, we have seen bond volatility pick up in a way that we usually don't ahead of elections. Henry Bassman, the man who created the MOVE index that tracks bond volatility, pointed to this as one of the largest event days that he's seen in his career. You can kind of see it just picking up there. What are you seeing from positioning, from clients, just how much demand there is for protection just around that date in the aftermath itself?
Yeah, I think as you alluded to, investors just really nervous about the election, and anything they can do to mitigate that, they're going to do. And so I'm not really surprised to see vol pick up and people looking for protection, because there's just so many unknowns here. Not only the presidency, but then of course Congress after that. And there's a lot of very close races that we'll be following. And it probably has a pretty big impact on fiscal policy. It has a big impact in terms of tariffs and other policies that might get enacted. So I'm not surprised that people want some protection, because we just don't know which way it's going to go.
Kathy, how does that contrast with the unbridled optimism of corporate credit right now? Investment grade spreads at their tightest since 2005. What's going on with this market?
Yeah, I think a number of factors are supporting investment-grade corporate credit. One is obviously corporate profits continue to do very, very well and hit record highs. So companies, in the investment-grade space are in really good shape. Supply and demand has been a factor as well. There's been pretty good issuance, but demand has been really outstripping supply for quite some time. And you don't have a weakness in the economy. So the recent economic numbers have pointed to GDP growth roughly in the 3%, maybe plus area. And so that bodes well for corporate profits going forward and cash flows. So I think a lot of people are looking at the corporate bond market, for the appeal of the yields, which are 5%-ish or so, and for the fact that we don't have some of the fiscal policy issues affecting the corporate bond market that we have affecting the treasury market.
But is it at this point, I understand the optimism now, but I mean, are we just priced to perfection, Kathy? Can spreads realistically get any tighter?
Doubtful. It's doubtful. I mean, I suppose in theory they could get tighter. In theory, they can trade through treasuries, but it seems very unlikely that would happen. But yeah, I think the market is priced for perfection, so you have to expect a certain amount of volatility if you're in investment-grade corporate bonds. We still think all-in yields are attractive. We think the fundamentals are good. But yeah, the total return possibility, unless yields fall, is probably lower now, just because spread compression isn't going to be there.
When it comes to this treasury market, Kathy, especially what we've seen with really strong data, really over the past 3 weeks, is it still your assumption that this is a Fed on autopilot that's just going to be delivering cut after cut, 25 basis points maybe now? Or do we need to expect a pause to come? And what does that say about the path of yields near 4.1% for the 10-year?
Yeah, I think there's a good chance the Fed could pause in November, simply because we've now had data that contradicts or moves away from the narrative they were working with at the September meeting. So a big improvement to the labor market data. It's mixed. Okay, so we had the payroll numbers come up and unemployment edged down, although some of the other data, such as the quits rate and job openings, not looking as strong. So they may want to pause and just say, let's get a handle on where the labor market is before we take another step. The inflation numbers, I think, are still in their favor, still looking good, still trending down, but PCE this time around isn't likely to be quite as friendly as the last couple of months. So they could take a pause and just kind of sit back and reassess where they are and how fast they should go, or they could move in November because the Fed funds rate is still so high relative to inflation, and then take another look in December. We still expect at least one rate cut of 25 basis points between now and the end of the year.
Kathy, a joy, as always. Thanks for getting up early for us. That's Kathy Jones of Charles Schwab. You're watching
Thanks, Lenny.
Bloomberg.
It's the world's second largest economy with a growing influence in global affairs. But geopolitical uncertainties, deflationary pressures, and questions about foreign investment linger. Bloomberg, the China Show, brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China. Bloomberg, the China Show. Weekdays around the world, right here on Bloomberg. Context changes everything. The top names in tech are on Bloomberg.
A large number of countries are subsidizing their regional data centers so that they could become able to build out their AI infrastructure. They recognize that their country's knowledge, their country's data, digital data, is also their natural resource. Not just the land they're sitting on, not just the air above them, but they realize now that their digital knowledge is part of their natural and national resource. And they ought to harvest that and process that and transform it into their national digital intelligence. And so this is what we call sovereign AI. You could imagine almost every single country in the world will eventually recognize this and build out their AI infrastructure.
Nobody covers technology like Bloomberg. Context changes everything. Welcome to the world of decentralized finance.
With a surge in Bitcoin, you have crypto stocks also surging.
Bloomberg's covering all things crypto, the people.
This is a political attack, and we must hold our elected officials accountable.
The transactions.
Really a record-breaking moment.
Bitcoin is the exit strategy.
And the technology.
Awareness is going to grow, and these things grow the overall industry. And
crypto as an asset class is here to stay.
Bloomberg Crypto, only on Bloomberg.
It's Bloomberg Brief on this Friday morning. I'm Danny Berger in New York. Apple is regaining its customers in China. The latest iPhone 16 sales soaring 20% in the first 3 weeks of its release compared to last year's model. For more, let's bring in Bloomberg's Charlie Wells. Charlie, break down the numbers for us.
Yeah, Danny, I mean, Apple needed this. So their iPhone is their most important product. It brings in half of sales for Apple, and it's something of a gateway drug for the company. You buy the phone, you start buying services and other devices, and China, of course, is the world's largest and most competitive smartphone market. So this is a very positive development for them, and it looks like in these first 3 weeks, it's been going so strong for the iPhone 16 because they have not had the production snarls that the prior model, the iPhone 15, had, and it also looks like it's operating in a slightly more favorable competitive landscape because last time during the iPhone 15 rollout, they faced a much stiffer head-to-head competition from a new Huawei model. So this is all what Apple wants to see right now. Let's see if they can keep that momentum going forward.
Charlie, we're speaking with Dan Ives in just a moment. I think he might agree with you on some of those points. So those earnings coming out October 31st. In the meantime, we've already had Netflix reporting after the bell yesterday. Those shares up nearly 6% so far in the pre-market. Clearly some strength. Where did it come from?
Yeah, Danny, so they saw some strength from this sort of tried and true strategy over the past few quarters of clamping down on password sharing and also rolling out that new ad-supported layer. So that's something that's been working in the past, but analysts and investors have been really focused on the future, on growth in the future, and they also had a story to tell there. Let's take a listen to what Netflix co-CEO Ted Sarandos had to say.
Let's start with, looking into 2025, we're feeling really good about the business. We had a plan to re-accelerate growth, and we've delivered on that plan. You can see that in our 2024 financials. We expect to deliver 15% revenue growth and 6 percentage points of operating margin improvement. And engagement, which we view as our best proxy for member happiness, because when people watch more, they stick around longer, so that's retention.
So, Dana, you heard there that mention of the word engagement, and that is a metric that Netflix really wants to be measured for going forward. And they had some good stats there as well. On their earnings call yesterday, they talked about how the average Netflix user spends 2 hours per day watching Netflix. I'm not one of those people, but that is a really healthy metric for that company.
I like how they're like trying to track this message of like customer happiness. I don't know, anything but report subscriber growth going forward, I guess, Charlie. Charlie, thank you so much. Charlie Wells there. Joining us now, as I mentioned, Dan Ives, Senior Equity Analyst at Wedbush. Dan, thank you so much for joining.
Yeah,
so you were sitting by hearing Charlie describe the enthusiasm over iPhone 16. You've also just come back from doing some channel checks in Asia. Are you seeing that same sort of enthusiasm over Apple?
I mean, this is so consistent with what we've seen. The renaissance of growth has begun for Apple with iPhone 16. I think China, look, that was the biggest issue. That was a headwind. Now it's a tailwind. They have mojo going into the next, I think, 6 to 9 months. And that's why, look, a lot of the bears, they've yelled fire in a crowded theater for the last month. But I think they go back into hibernation mode, in our opinion.
Well, they've been yelling fire, Dan, because it's a Chinese economy that's been looking weaker. It's a lot of competition. And that was the reason so many people have said this launch maybe will disappoint and it doesn't have the full AI capacity. So why didn't it disappoint?
Yeah, well, first, you have 100 million iPhones in China in a window of an upgrade opportunity. I also think the climate there, and we've seen it firsthand, it's definitely much tamer than a year ago, where really the U.S.-China Cold Tech War, I think, was front and center. The other thing is, it's the best product out there. I mean, if you look right now, the new Huawei phone, I'd say that's the equivalent of essentially an iPhone 14. So when you look at iPhone 16, this is globally going to be the start of an AI-driven supercycle. And again, a lot of those features get rolled out, called over the next few months. I think it's going to be a monster December quarter. I think that's why 6 months from now, we're looking at a $4 trillion market cap for Apple.
Wait, so are you saying that Apple's going to be able to take market share back from some of the homegrown heroes, from the Huaweis of the world?
Oh, yeah. I mean, look, they've gained, call it 300 bips of market share in China over the last 18 months. I think they gain another, call it 100, 150 bips of market share over the next year. And that's going to be very important because China is the hearts and lungs of the Apple growth story. And I continue to kind of handhold investors that this is the beginning of a renaissance of growth in Cupertino. And this data just further supports what we've been seeing in Asia firsthand.
Dan, we're also a few weeks away from just the big tech earnings in general. Just looking at some of the data from what we've had earnings so far, Microsoft, Amazon, Alphabet, Meta, $106 billion in CapEx in first half, almost 50% higher year over year. Most of that going towards NVIDIA and chips. Do you expect this earnings to hear that type of spending continuing at a similar pace?
I think for bulls, get the popcorn ready as those calls start. Because everything we see, it's going to be a robust tech earnings season. I think Netflix kicked it off.
Yeah.
It's because of AI. You have $1 trillion of CapEx. And now, obviously, that's led by Godfather of AI, Jensen, NVIDIA. But I think what we see, not just from NVIDIA, but what we're going to see from the hyperscale players, Microsoft, Google, Amazon, I think software is going to be strong across the board, cybersecurity. I think tech rips higher going into year end. Clearly, election, some volatility, white knuckles. I think 20,000, we're going to be looking at 20K NASDAQ. That's going to be the conversation over the next 3 months.
So if the bulls are eating popcorn, it sounds like the bears might need something a little bit stronger, considering what you're saying. Okay, but there is this risk of an election, and not just an election, but candidates that seem to have both pursuing antitrust policies. Google's a great example of this, and I know you've written a lot about it. They're under the cloud of the US government trying to break it up. Do we see a Google that's maybe more reticent to spend, to make big CapEx plans if there is this threat looming over them?
Look, in terms of antitrust, and obviously a huge overhang on Google, I mean, we saw it cover Microsoft late 90s, 2000. Like, that is the precedent. I think Google, they learned from Microsoft's mistakes. They're not going to hold back. I think actually it's the opposite. They will double down. They'll fight this in court for years. There will be business model tweaks, but I believe very low chance of any sort of breakup happening. And I think Google, in my opinion, is probably the biggest risk reward in terms of as a large cap tech stock. I think 30, 48 hours upside here in terms of what we see, just even on some of this antitrust overhang.
So antitrust overhang happens, and unlike Microsoft, which kind of pulled back after some of the action against them in 2000, you think Google's going to go full force into things like AI and that sort of thing, even with this threat?
It's a Game of Thrones. It's a battle right now in big tech. They can't just hold back because of this. And also look at Apple and others. It's not just Google that's under scrutiny. Gates' biggest regret from Microsoft was holding back spending in that period. Other big tech players have learned there, but we are still in 1995, almost 1996 moment for tech, not a 1999 bubble moment. I think that's what's going to continue to play out going into not just year-end, but 2025.
What did you make then of the Bloomberg reporting earlier this week that Qualcomm was kind of pumping the brakes on looking at Intel to take it over until the election happens and uncertainty there?
I mean, being tied to Intel, it's a nightmare on Elm Street. So the last thing you want to be in this market is tied to Intel. Even on the ASML and everything else, look at TSMC. Look at Godfather of AI, Jensen, NVIDIA. You want to be tied into the left lane, the Bugattis going 90 miles an hour, not the minivans 45 miles an hour in the right lane.
So what, it's just an excuse to kind of back off of Intel? It has nothing to do with politics? Is that what you're saying?
I mean, I'm just saying right now, you do not want to be tied to Intel in this market.
You mentioned ASML and TSMC. It's so funny how this narrative has been so whipsawed this week. ASML comes out and it's doom and gloom and maybe the chip boom isn't as big. TSMC completely blows that narrative out of the water. What do you make of the divergence between the two? Were we just misreading what we heard from ASML?
I was shocked. We talked about when ASML hit. That to me, that's more legacy on chip side related to Intel. The fact that the AI names were down there, I mean, that was a gift. You look at TSMC, that's the indicator. And I think, look, right from Asia, demand to supply, 15-to-1 demand to supply. And I think that is just not just positive for NVIDIA, it's positive for AMD and others. But I think that's why in this market, you got to be careful in terms of some of the reads.
And in this market that is volatile off of some of these things, does that tell you, Dan, that there's still some weak hands in these stocks, that there's still some nervy investors here that can kind of run for the exits on signs that, as you point out, might not be as telling as they are?
Yeah, I think that's a great question, because I think you're definitely seeing that.
Yeah.
Any sort of nervousness, some white knuckles, head for the elevators. But what we've seen over the last year and a half, 2 years, is that a very similar sort of, I think, chapter play out. But it is 9 p.m., almost 9:30, in the AI party. That goes to 4 a.m. I'm not saying in the midst the DJ stops playing music, there's glass on the dance floor, but this is a party. I think it's really unprecedented in the last 40 years.
With lots of popcorn at it.
Popcorn is what you get ready for those earnings call with tech coming up.
Got it. Boundless ends of metaphor, Dan. So great to have you on. Thank you so much for joining us. Dan Ives of Wedbush, excellent as always. Okay, coming up, we're going to set you up for your trading day. We have some more earnings and more Fed speak. All of that to come here on Bloomberg.
From our studios in New York and San Francisco, our expert hosts have the data and analysis about the companies you know and the startups to watch, plus the interviews you don't want to miss. Watch Caroline Hyde and Ed Ludlow on Bloomberg Technology, the only daily business show dedicated to tech, right in the middle of the trading action, every weekday, only on Bloomberg Television. Context changes everything.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
This is Bloomberg Technology.
This is the Asia trade.
You're watching the close.
Welcome to Balance of Power.
This is Bloomberg. The countdown is on. Everything you need to get the edge at the end of the market day.
Big tech earnings kick off later this afternoon.
Gilead is coming out right now.
We have take two numbers. Back to the markets, right? Our bread and butter.
NVIDIA is one of the best stories in the tech space.
That actually matters a whole lot more.
It might shock some of your viewers.
You're watching the close.
Get ahead of tomorrow's trading with The Close, weekdays on Bloomberg. Context changes everything.
This is Bloomberg Brief. I'm Danny Berger in New York. Let's get you set up for your trade. We're going to get earnings from American Express, Procter & Gamble, and Schlumberger are all coming before the bell. Plus, more economic data. U.S. housing starts. That comes at 8:30 a.m. Eastern. From Fed Speak front, we're going to get Raphael Bostic, Neil Kashkari, and Chris Waller all throughout the day. In terms of individual movers, I mentioned American Express. They're going to have earnings before the market opens. Shares are up 51% year to date, 1.8%. Schlumberger also earnings before the market opens, as I mentioned, expecting to report the highest third quarter sales in a decade. Finally, Intuitive Surgical extending post-earnings gains up 6.2%. Strong quarter of placements for surgical robot Da Vinci 5. A quick check on your market this morning. S&P 500 futures a little bit stronger. We have the latest Bank of America flow show saying that there are signs that the Trump trade is gaining traction. Since the beginning of October, Goldman's baskets of stocks to outperform on a Republican victory has decisively overtaken the Democrat peer. Michael Hartnett writing that odds tilting towards Trump winning the presidency has investors redoing the 2016 playbook, that they are front-running the 2016 moves. And that means banks, small cap stocks, and dollar are all surging higher. Your 10-year yield back at 4.1% this morning. Okay, that is it for Bloomberg Brief on this Friday morning. Surveillance will take it from here. This is Bloomberg.
You are also an owner, I should have pointed out, of 3 major sports teams.
That's right.
And you're the first woman, as I understand it, the first woman to own 3 major, have stake in 3 major sports teams. Is that right?
Yes, and we'll say African American.
You were approached by the owner then of the, I guess, the Washington Wizards and the Washington Caps about maybe buying the Washington Mystics, which is the women's basketball team. And what did you say?
Well, first of all, it was Abe Pollin. He did come to me and Susan O'Malley, and they said, Abe Pollin says, look, I want you to be the face of the Washington Mystics. And I said, what do you mean be the face of? He says, I want you to buy this team. His health was failing. And I have to tell you, and a lot of women can understand this, we never get these opportunities. So that was the first thing that struck me. And I was flattered. I was really flattered. I said, well, Abe, what are the financials on this? And he handed them to me. He says, well, they're not making money. But I was still intrigued about team ownership.
Bloomberg covers the world with unmatched reach and resources. From more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg, context changes everything. Get your fixed income fix. Watch Bloomberg Real Yield every Friday right here on Bloomberg. Context changes everything.
At end July, we didn't need a rate cut. Mid-September, we needed a 50 basis rate cut. And now we're talking about caution on rate cuts.
But if this market keeps changing narrative.
People might say they're bearish, but when you look at the positioning and look at their equity exposure, it's still relatively high.
A month ago, we said that investors were nervous bulls. Now they have just become bulls.
It's become a good news is good news, bad news is bad news type of environment.
This is Bloomberg Surveillance with Jonathan Farrell, Lisa Abramowitz, and Anne-Marie Hordern.
Let's get you to the weekend. That feels good, doesn't it?
It does feel super good.
Let's get you to the weekend. Live from New York City this morning. Good morning for our audience worldwide. Bloomberg Surveillance starts right now with your equity market on the S&P 500. Looking a little something like this and poised for a 6th week of gains on the S&P 500, the longest weekly winning streak of the year so far. We're up a 10th on the S&P, on the NASDAQ a bit of outperformance, up 1/3 of 1%. Apple, the stock to watch. In a pre-market, the stock is up by 1.2%. Apple in China. Counterpoint Research. Sales of the iPhone 16 up 20% in the first 3 weeks compared to 2023.
Big question here about whether this is a matter of China sales outperforming based on a very low bar in 2023 due to supply disruptions, et cetera, or is this a sign that we've seen a bottoming out in consumption in China and that, frankly, the spurs that the government is providing to people to really go buy things is not just going to affect Chinese companies?
Well, they're off to a good start, but the issue is you have these national champions in China that are also still doing well. It's a very competitive market. Dan Ives, though, just on what Danny Bergern said, Apple's getting its mojo back in China. He said China at one point was a tail risk. It was a headwind, and now it's a tail risk.
Better news out of Taiwan Semi, better news potentially out of Apple, and decent news out of Netflix. After the close yesterday, the stock is up by 5.6% in the pre-market. Lisa, I think this is a clear, true beat across the board.
It was a beat across the board with actual subscriptions coming in much higher than expected. Okay, I hate pouring cold water over it. I'm asking questions. Is it just from a low bar with Apple? But with Netflix, is it just a matter of them cracking down on password sharing? And they can keep doing that and keep adding to their subscription rolls because people are addicted to their different shows and are going to pay for it to get their subscription. Yes, Anne-Marie. But I do think that, you know, there is a question of how far can this actually go?
You can't out me for my password stealing already on television. But the issue is now, are they going to be at peak, basically, in the growth? Because as much as you crack down on password subscription, at some point that stops. How much more can you grow? And that's what analysts are a little bit concerned about.
Didn't stop overnight. Stock still rallying in the pre-market, up by close to 6%. More on that story a little bit later. I want to pick up on the story with crude. Brent and WTI, just a little bit softer. No drama here, not a big move. Down by about 1/3 of 1%. Brent at 74. WTI at 70. New developments in the Middle East in the last 24 hours. Israel killing the leader of Hamas. The U.S. pushing now for a ceasefire.
That's right. Yahya Sinwar, the Israelis announced, is now dead, the leader of Hamas. So President Joe Biden got on the phone with Benjamin Netanyahu. He briefed reporters as he touched down in Germany, saying there is an opportunity now. There is a chance potentially to move on, to get a ceasefire agreement. But we need to wait and actually see, because Benjamin Netanyahu spoke yesterday, and it didn't seem like they were ready to give up.
There are a lot of questions, like who are they even negotiating with at this point? How do we even understand who the leadership and where the balance of power actually is with the Hamas group, where the leverage is going to be, and what this means for Iran? Israel has not yet retaliated against Iran. Either way, a lot of people are saying this gives the hope that maybe we could finish this conflict on both sides and once and for all, but there's still quite a bit of distance between now and then.
Going into another weekend, still waiting for the same thing, waiting for that retaliation. Brent crude 74.27, WTI 70.52. Coming up this hour, here's the lineup for you. Jeff Yu of BNY with traders dialing back rate cut bets. We'll catch up with Norman Rule of CSIS as Israel keeps the leader of Hamas, and Jason Bazinet of Citi as Netflix posts another strong quarter. We begin this hour with stocks poised for a 6th straight week of gains as traders dial back rate cut expectations following better than expected economic data. Jeff Yu of BNY is cautious, writing data are now refusing to cooperate. September's job and inflation figures in the US have upended any expectations of more aggressive easing. With the US election also looming, the window for risk appetite to improve further is looking very small. Jeff joins us now for more. So Jeff, let's get into this bond market. Do you think these higher yields back through 4% on a 10-year are starting to become a little bit of a headwind for equities?
I think so, but the markets are trading on a day-to-day basis right now, a week-to-week basis. At least I wouldn't rule out, next week we get some data prints, be it on the consumption side or otherwise, or earnings, anywhere in the world, to just pour some cold water again. I guess this is less of an equities or even bond market story right now, but within FX markets, for example, I look at some of the key pairs. I think with the election looming right now, so that aspect of risk appetite, which has been surprisingly subdued, or risk aversion rather, been surprisingly subdued of late, I think that's coming through into markets now.
Jeff, let's talk about the bond market then and compare a spread. The German 10-year versus the US 10-year. That spread has been widening. We're threatening to talk about 200 basis points all over again. And I just wonder how much wider you think that spread can get, because we had Mohamed El-Erian on the program just yesterday who suggested this ECB is going to cut more than this Federal Reserve in the next year.
I absolutely would not rule out 50 basis points for December, and the fact that Madame Lagarde did not rule it out yesterday, I think, is quite telling. Had some reports just now saying there were some governing council members wanting to remove the notion of restrictive, but guess what? In the statement, straight off the bat on Bloomberg, the second headline was actually restrictive to remain. So I think quite a bit of conflict there. Let the data do the talking for Europe, but the bias is absolutely to the downside. US can stay, US yields can still where they are, even taking into account the risks up ahead, but the direction of travel for German yields in particular is down given the lack of supply.
So we're talking about the bond yield spread. I'm wondering about the currency spread and whether this means that there's a greater likelihood of parity once again between the euro and the dollar. This is something that a lot of people are talking about. Where do you fit in this discussion?
Well, I started with parity at the beginning of the year with less than 2 months left, or just over 2 months left. I think that's a bit of a stretch. I still think we can see 105, but it's less about what's left for the rest of this year, another 50 basis points. How much for next year? For the Fed right now, 25 basis point clip cuts every single quarter. For the ECB, I think it's going to be much more aggressive than that. So for the next 6 months, mid next year, parity absolutely still going to be my target.
So there's a question, Jeff, about what's driving this, right? Is it essentially interest rate differentials that's driving the currency market right now? Is it growth differentials, or is it the politics of the moment? And I'm wondering what is going to drive your look at this in terms of the potential for increased tariffs to actually affect the euro and make it weaker? Or is it a matter of, further rate cuts, are they good or bad for the euro if they potentially could support growth?
So I go back to our positioning numbers right now. I think one thing I should have really respected a bit more was how under-positioned people were in euro over the last 12 months, or rather how over-positioned people were in US assets, full stop. Not just the dollar, US equities, US bonds as well. Our cross-border clients are still buying US debt right now. So that needs to start to come off or stabilize and to allow the euro a clearer path. But to your point about tariffs, absolutely. Remember, tariffs, you're essentially imposing real effective exchange rate appreciation on the nation you're imposing tariffs on. So euro will absolutely be affected if that's going to be on the way. And if anything, I look at dollar MEX, that's pricing in a risk. I look at dollar renminbi, dollar yen, they're pricing in risks. It's not being priced in euro dollar. And also, alas, one of my favorite currencies, the Swiss franc, because I look at Swiss Pharma, that was a target 8 years ago and could come back online again over the next few months or so.
So Jeff, what you're seeing play out in the FX market, is it basically pricing in a Trump win already?
I would say yes. If you're looking at where dollar MEX is and dollar yen is and what the market is trying to do with dollar CNY, though there are other aspects out there. Look at implied volatility. So the insurance, being put on. Mexico is a factor right now. Dollar Swiss as well. So that's why I said it earlier. In the FX market, election risk that is really starting to come to the fore relative to other markets at this point.
You're not alone in this euro parity call. A number of people have come out and said this is not far-fetched anymore, given how potentially the polls are looking towards the U.S. election. But would you maintain that call if Kamala Harris wins?
I would maintain the call because at the beginning of the year, it was really very minor in terms of what the election held. My euro call was based on European growth disappointing to the downside. That has materialized. And as the PMI reports have been highlighting, it's structural. There is not going to be a cyclical upturn next year. I just don't see where it's coming from, given the manufacturing constraints across the auto industry, the tech industry, for example. It's that which is going to drive things low in the Eurozone, especially as public spending comes off and services inflation comes off. They're going to undershoot to the downside in inflation. It's a Eurozone story.
Jeff, you've just screamed a load of lists, a load of things that I think scream get long bonds. Are they just another reason after another reason to get long duration in Europe?
So within Europe, pick your market carefully at this point. And I do think that markets do want to get back into France right now, notwithstanding the gyrations regarding politics earlier this year. I'll look at our flow data. Two things matter. One is issuance and supply, and secondly, it really is yields. And that's where probably some of the large issuers, France and Italy, still have advantage. As much as I'm worried about the Eurozone right now, fiscal is one thing I'm not concerned about. Due to NGEU, due to joint issuance, that's not an issue until 2027 when we get back to the next budgetary negotiations.
Jeff, it's good to hear from you, sir. As always, Jeff Yu there of BNY on the European backdrop right now. It's not good. He's just gone through a list of things, and a lot of those things just add up to the same thing, which is get long. European bonds are not. European equities are not the European single currency either. Christine Lagarde's guidance hasn't changed. The data has. She says meeting by meeting, we're data dependent. I think the market's doing the work for the ECB now for them. They're looking for even more interest rate cuts from the ECB. And I think we've all heard the same thing over the last year or so. Recalibration, normalization, recalibration, normalization. How long before we start to hear the word easing in Europe? That they're easing, looking to get policy accommodative because the outlook for growth is so bad.
How much is the reason why they haven't done that just simply because of dissent on the ECB committee, as Jeff was talking about? Because clearly there are some people who are in the mindset to go there right now. What strikes me, as you were talking to Jeff and saying, doesn't this make you go long European duration? When will European governments say, okay, if yields are going that much lower, let's borrow to actually juice growth? And that, I think, is sort of the natural question mark when it comes to the fiscal side of things.
And the worst for Europe may still be ahead of them. Christine Lagarde yesterday talked about the idea of barriers, which Donald Trump recently said there would be tariffs on places like the European Union. She said that would be, quote, downside risk. Potentially, this can get so much harder for Europe.
Jeff Yu, looking for parity on euro dollar into next year. 108.42 is where we trade right now. I mentioned this call from Deutsche Bank yesterday, Mark Wall. Today's decision represents a pivot point into a faster normalization of monetary policy. A lot of people echoed that yesterday following Christine Lagarde's news conference. With an update on stories elsewhere this morning, let's cross over to Danny Berger with your Bloomberg Brief. Hey, Danny.
Hey, John. UK retail sales rose for a third straight month, thanks in part to demand for consumer tech, including the new iPhone. Sales rose to the highest level in more than 2 years, now just 0.2% below pre-pandemic levels. The data is a welcome boost for the new government. It had been accused of hurting sentiment after signaling tax increases in this month's budget. Netflix shares higher in the pre-market trade, 5.7% higher. The streaming giant added more than 5 million customers last quarter. It eclipsed Wall Street's estimates on every major metric. Netflix co-CEO Ted Sarandos says that sales for the period grew by 15% to more than $9.8 billion. Fox News' interview with Kamala Harris was the most watched of the campaign season so far. Fox said that Harris's interview attracted 7.8 million viewers. The half-hour segment, which aired 6 p.m. Eastern on Wednesday, drew a bigger audience than other Harris TV appearances. That includes the CBS News 60 Minutes one and ABC's The View. It also beat the 3.1 million viewers who tuned in to Donald Trump's town hall earlier on Wednesday. And that's your brief, John.
Danny, thank you. More from Danny in about 30 minutes' time. Up next on the program, ramping up the rhetoric on the campaign trail.
My opponent feels like she does not have to be here, and I guess you should have told her the funds were going to bail out the looters and rioters in Minneapolis.
Don't say anything negative about Catholics.
I would never do that, no matter where I was. That would be like criticizing Detroit in Detroit.
That conversation up next, live from New York City. Good morning.
This is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia. We'll walk you through what you need to know to kickstart the European trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in every weekday at 6 a.m. London time, only on Bloomberg Television.
Middle East and Africa. Vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
Live from New York, welcome to the program. Equity futures on the S&P up by 0.1% here. On the Nasdaq 100 up by a third. Better news out of Apple. That stock is up at a pre-market by about 1%. Poised for a 6th weekly winning streak. 6 weeks of gains on the S&P 500. The longest such streak going all the way back to December of last year. In the bond market, 2-year, 10-year, 30-year shaping up as follows. A 10-year yield that's just a little bit higher and holding on to a 4 handle, 4.09%. We've talked a lot about Europe. The German 10-year is trading with a 2 handle. And the spread between the 10-year in Germany and the 10-year in the US is threatening to break through 200 basis points all over again. Europe and the United States right now seemingly headed for two very, very different worlds. That's the bond market. Switch at the board and get to the commodity market. Gold, 4-day winning streak. On the year up by more than 30%, taking out 2,700, a new all-time high.
To me, what strikes me is that gold is outperforming right now the S&P 500. It's outperforming stocks. It's outperforming bonds. It's outperforming other commodities. Right now, why is gold the biggest outperforming asset right now out there? It's telling us something. What's gold telling us? I mean, honestly, this is what people say. At the same time, there is this feeling, wait a second, if you have the deficit concerns, there is so much uncertainty. What is the new haven trade, especially at a time where inflation could be potentially a big unknown risk in the future?
There's a lot more short-term concerns for investors than the deficit. That is one stateside about this U.S. election, but also what's going on in the Middle East, especially when unclear with potentially what this could mean in terms of a wider regional war. Gold is a safe place to hang out.
Do you remember when Mark Zandi came on the show of Moody's? And he said, Lisa, gold, really?
I'm still on it,
How many weeks ago was that?
This is
Were you
for
thinking of Mark as you were saying that?
It's your victory lap.
You know, honestly, it's not my victory lap, although I think that gold is something that's important to look at, and I don't think I'm alone. I get a lot of messages about gold. I see advertisements on late-night television. No, I mean, in all seriousness, there is this question about whether you also see this into crypto. I get comments always, too, like, hey, boomer, you're not paying attention to crypto, but you saw a lot of assets into crypto also in the past week.
They call you a boomer.
I know.
That's pretty brutal, that is.
I know I'm not a boomer, but there is a question here about where the havens are at a time where potentially the deficit and some structural inflationary forces could present that as an upside surprise.
Top in 2,700 in the commodity market for gold this morning. Under surveillance this morning, ramping up the rhetoric on the campaign trail.
My opponent feels like she does not have to be here. If you really wanted Vice President Harris to accept your invitation, I guess you should have told her the funds were going to bail out the looters and rioters in Minneapolis.
Thou shalt not bear false witness to thy neighbor. Indeed, especially thy neighbor's election results. And maybe don't say anything negative about Catholics. I would never do that, no matter where I was. That would be like criticizing Detroit in Detroit.
Here's the latest this morning. Donald Trump and Kamala Harris trading insults at last night's Al Smith dinner in New York. Harris opting not to attend in person, instead sending a pre-recorded video message. Both candidates heading to Michigan today with the election entering its final stretch. Joining us from the nation's capital, Bloomberg's Joe Matthew. Joe, I think we're still asking the same question. Why didn't the vice president attend that dinner?
You know, it's a great question, and it's one of these things that we'll talk about in hindsight if this doesn't play out for her. Should she have gone? Should she not? The campaign decided that being on the campaign trail was time better spent. It's kind of a bizarre evening, though, Jonathan. We're talking about a Catholic fundraiser supposed to be, you know, kind of good-spirited. Everybody gets together. Never thought we'd be talking about Mary Catherine Gallagher on surveillance, never mind before that particular crowd last night. And by the time Donald Trump got on the stage, the insults started flying. He questioned Kamala Harris's intelligence. He questioned the manhood of her running mate and insulted her husband, all before he had actually nice things to say about Chuck Schumer and Eric Adams. He was on the teleprompter. He was off of it. He was actually complaining about that. He brought some written notes to read some of the jokes to the crowd here. But you've been to these dinners. They're supposed to be lighthearted. We heard as many boos as we heard laughs last night.
We also heard a lot of people applause. One of those, I think, Joe, was when he did mention one campaign promise, which is basically a U-turn from something he did in office. Is the former president serious about SALT?
That's a great question. And I think that for that room, yeah. When he's talking to New Yorkers, yes. But look, Anne-Marie, we have the same conversation here all the time. There are elements of Donald Trump's proposals when you consider tariffs and some of the other ideas he has about the border that he could do through, you know, executive action. He's going to need Congress. He's going to need the Ways and Means Committee and even Democrats from places other than New York to make the SALT thing happen. Whether or not this is a major priority of his, it's part of a series of tax proposals that he's made, and he likes to get around to them in front of audiences like that. Kamala Harris is spending a little bit more time, you know, fooling around with him, getting into the personality aspects, and that's more of what the evening was.
So we're, you know, just a few weeks away now, Joe. We did see Kamala Harris sit down for that one-on-one with Fox News' Bret Baier, bringing in more than 7 million viewers, the biggest we've seen in this election cycle. Will she do more of these types of interviews?
Well, there's a CNN town hall scheduled for next week, but you know how this stuff goes, Anne-Marie. Maybe she'll show up talking to you guys one morning. I think the campaigns are taking this day to day, and they do what they think they need to do to appeal to, in some cases, very narrow demographics. If we think we need to talk to Wall Street, we sit down with John Micklethwaite this week. If we need to talk to young black men, we sit down with Charlemagne the God. These have been really game day calls that we're seeing. And to your point, without a debate or another major event here in the next 2.5 weeks, I think you're going to see some interesting ad-libbing from the campaigns in the swing states.
What are both campaigns doing today?
Well, it's on to Michigan today, as Jonathan mentioned, and they're going to be there over the course of the weekend. I'm going to be very interested to hear how Donald Trump is received in Detroit. Kamala Harris was apt to remind everybody last evening that he was insulting Detroit. The governor and others throughout the state have made a big deal about this. It reminds us of when we got to Milwaukee, the RNC, having called it a horrible city. This is something that's going to follow Donald Trump on the campaign trail, knowing that he has to win the state of Michigan. They both do. There's a very critical Senate race there as well. We just saw a debate this week between those two, and you're going to be talking a lot more about down ballot just as much as you are the top of the ticket in Michigan.
Joe, forgive me, but even as we start talking about how they get the last votes, I'm still trying to figure out what their policies actually are. And I have to say, in that Fox interview, Kamala Harris was talking about how Iran is the biggest threat facing the U.S. A lot of people were surprised to hear that it wasn't China. And then you had Janet Yellen yesterday speaking, Treasury Secretary, saying trade and investment with China can bring significant gains to American workers and firms and must be maintained, talking about the necessity for a healthy economic relationship between the two. Do you have a sense of what the delta is between the approach to China between Donald Trump and Kamala Harris?
Well, to be honest with you, I think the real question here is what's the difference between Kamala Harris and Joe Biden? It was a very interesting moment in that interview with Bret Baier on Fox News when she said that this will not be a rubber stamp, not a continuation of the Biden administration. And people are really trying to find cracks there to see where the sunlight is. Difference between Kamala Harris and Donald Trump seems to be fairly stark just when it comes to tariffs alone. But we have to remind ourselves that the Biden administration kept all the Trump tariffs in place. They're still there today.
Joe, we've got to leave it there. It's got to catch up. Bloomberg's Joe Matthew with the latest down in Washington, D.C. We'll see you a little bit later. You can catch Joe a little bit later as well at 8:45 Eastern Time. We'll speak to him again for the week ahead down in Washington, D.C. and beyond on the campaign trail.
Yeah, I think that a lot of people are wondering just how much there are people who are undecided who actually will turn out and what that will mean. In the meantime, I do have to wonder what the actual policies are, how much what one person says at one place is going to actually go into effect. And that's the reason why you asked Jeff Yu, are we seeing essentially Wall Street bet on the Trump trade? We don't even understand what that Trump trade will look like the day after, should it be realized.
But I think a lot of people are looking that would be a weaker euro, because what Donald Trump has already said he is willing to do when it comes to China, when it comes to the European Union. The walls are going up, and you can bet their team is already looking at the legality on how they can actually approach this.
Andrew Balls of PIMCO was reflecting on this. We were talking about the bad growth out of Europe, the need for the ECB perhaps to cut interest rates even more. This was just another risk on top of all of that when it comes to positioning in European bonds.
Yeah, and the fact that essentially you get to a point, and you asked this question, at what point are we talking about interest rate differentials, and at what point are we talking about growth differentials? And at what point will the rate cuts actually help support the euro simply because you could end up with more growth? Of course, you add potential tariffs on top of that, and all of a sudden it gets really muddy, which is the reason why I think a lot of people are kind of sitting on their hands or just going into gold.
The one big unknown for me is not gold. The one big unknown for me, or maybe why this is gold is actually higher, is what happens if there's a contested election. Ray Dalio talked about this overnight, and he said, when asked about the chances of results being contested, he said, quote, if it's a close Trump loss, I would say it's almost an even probability, referring to Donald Trump, saying that potentially is going to be on the table if Trump loses, and it's very close when it comes to these margins. And what history has told us is this is going to come down to maybe, what, 80,000 votes in a few states.
Libby Cantrell of PIMCO on this story a little bit later this morning. Catch that at about 7:15 Eastern Time. Up next on this program, we'll catch up with Norman Raw, the former senior U.S. intelligence official, as Israel vows to press on in Gaza following the death of Hamas's leader. From New York City this morning, good morning to you all. Equity futures just about positive on the S&P 500, up by a little more than 0.1%. In the bond market, yields just about unchanged and holding on to 4% on a 10-year, very close to 4.1%. From New York, this is Bloomberg.
I've seen firsthand how some fashion businesses make women feel. And I think there's one thing, you know, being really vocal and being an Instagram activist and talking about something, there's a difference than putting your money where your mouth is and really trying to do something about the problem. And that's what I did with that business. It was about how do I take everything that I know and I've learned and actually do the opposite. And I think that as a young black female entrepreneur, the only thing that I could do was what I know from my experience. And the honest truth is, I didn't set out to create a company that was like deeply rooted in the principles of inclusivity and diversity. I set out to make a company that was right for me and my friends, and I knew that if I had a problem, chances are somebody else does. And I think that's where so many businesses are, you know, created, when you're solving a problem that's real for you and therefore real for the consumer.
From the beating heart of global finance, economics and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacqua, and this is The Pulse, every weekday only on Bloomberg.
New leadership over at CVS. CVS has lost almost a fifth of its market cap through the year so far. The stock looks like this in a pre-market. Bramo, new leadership. Karen Lynch is out.
Yeah, and David Joyner is now its new CEO. This is the Wall Street Journal is reporting that they are going to miss guidance, and it's after we already heard from Walgreens that they're going to be cutting stores. It just raises a question about whether this is a delivery kind of performance issue or whether this is something more structural in terms of some of the headwinds facing this industry.
CVS down about 10.5% at the pre-market. More on that story a little bit later. Let's turn to the broader market. Equity futures on the S&P 500 firmer by a little more than 1/10%. The Nasdaq up by 1/3 of 1%. Thank you, Apple. We'll talk more about that story in just a moment. Apple up in the pre-market by something like 1% through most of this morning. The stock market heading towards a 6th week of gains. If we achieve that, the longest weekly winning streak of the year so far in 2024. Switch up the board and get to the bond market story. The 2-year, 10-year and 30-year playing out as follows. The 10-year just about unchanged at 4.09%. Before this week, 10-year yields have been climbing for 4 consecutive weeks. Can we make it a 5th on a 10-year? We're poised to do just that at the moment. On a 2-year, 396.74, just south of 4%, briefly popping through that in yesterday's session following much, much better numbers, retail sales, jobless claims in America. If we switch to the board and get to foreign exchange and compare the two stories, better data out of America, the City Surprise Index the highest since April. It keeps beating expectations. Then compare it to Europe. Dreadful. Euro dollar 108.45. That currency pair firmer by 1/10 of 1%. Just moments ago on this program, we caught up with Jeff Yu of BNY, who suggested that there was a real threat, a risk of dropping to parity next year.
Especially if you have an ECB that just acknowledges that it has to be easing rather than just simply adjusting policy, recalibrating like the United States. A real question here about how far this difference can really get, this delta. And I ask that question when you start talking about, do you go into European bonds? Can you see that happen without dragging down U.S. yields as well? Is this sort of truly a separate story?
How much of a decoupling can we actually see? 108.45 on the euro is where we trade right now. Under surveillance this morning, China's central bank moving to support markets after data showed the economy expanding at the slowest pace in 6 quarters. The People's Bank of China disclosing more details of its measures to boost capital markets, including share buybacks and equity swap tools. Not enough to lift sentiment over the last week, that's for sure, but just a little bit of a shining light, a bright spot. Apple, Counterpoint Research reporting that Apple's new iPhone is up by 20% in sales for the first 3 weeks compared to the same period just last year. That's the kind of thing we want to see in China.
Especially with consumption in the latest read, retail sales actually beating expectations, and it came after there was that cash supplement to certain homes to actually boost consumption. a real question here. There are two issues. One of them is boosting consumption. The second is boosting the stock market. Two very different things. The PBOC is on board. So whether it will actually go into effect, whether it will actually have a benefit for international companies, we don't know. The Apple news definitely a bright spot in terms of that. But on a larger scale, it seems like all the different prongs of the government are in tandem saying we have a problem and we need to put a floor under it.
Apple is up in the pre-market by 1.3%. Another name doing okay in early trading is Netflix, adding more than 5 million customers in the third quarter, beating Wall Street estimates across the board. The company predicting sales next year will increase 11 to 13% to as much as $44 billion through a mix of new members and price increases. Lisa, that stock up by more than 6%.
And we talked about how a lot of this is crackdown on password sharing, so there is this natural growth in subscriber bases. But if you go beyond that, there's a real question here about whether we're seeing a consolidation of leadership in terms of which streaming sites are actually going to be the ones that win out. And Netflix, where shares have quadrupled since some of the lows recently, really has showed a staying power, particularly catering to people in the younger cohort who obsessively binge watch at night.
And also getting into live programming. Next month, there's going to be a boxing match on Netflix. Then I believe around Christmas time, they're going to have 2 NFL games, live games. So basically, they're starting to realize that you can't just have the classic Netflix series or movies. They're going to start to get into some live programming. And then if you want to watch a football match or basketball match or boxing match, you have to subscribe.
Live programming. An appointment of view. There's very few left in broadcast. Sport is the one, which is why sporting rights have cost so much over the last few years.
And we've seen that increasingly creep to other platforms. I just wonder at what point do you end up losing some of the audience? I'm just thinking about the cohort in my household who binge watches and whether they're binge watching sports. Some of them, the Mets, yes, but some of them, you know, if they're locked out for too long, they're just not going to go there.
We know why it's annoying. It's hard to find where the sports are actually streaming now.
Yeah.
And we've talked about that on this program quite a few times. Let's give you an update on the Middle East. Israel killing the leader of Hamas and the mastermind of the October 7 attacks that ignited the war in Gaza. Israel vowing to keep fighting until all the hostages are released as the US pushes for a ceasefire deal. President Biden writing in a statement, "This is a good day for Israel, for the United States, and for the world. There is now the opportunity for a day after in Gaza, without Hamas in power, and for a political settlement that provides a better future for Israelis and Palestinians alike." Joining us now, leading our coverage out of the region is Bloomberg's Jumana Basetchi in Dubai. Jumana, do you think the United States could get what it wants to see?
Well, that's certainly the question, and certainly the U.S. see a window of opportunity here after the killing of Yahya Sinwar. It's difficult to overstate how central of a figure he was for Hamas. He's been part of the party for over 20 years now, a political prisoner, terrorist blacklist back in 2015, and of course was the mastermind of those October 7 attacks. So he has for very long been on the target list, and there have been several attempts to eliminate him since October the 7th. The successful attempt obviously happened in the last 24 hours. Now, what happens from here, you've got to take into consideration multiple different angles. Of course, the U.S. are saying that this is a window of opportunity to push forward with those ceasefire discussions. You even heard the Vice President Kamala Harris say something to that effect as well, saying that this is an opportunity to finally end the war in Gaza, and it must end in such a way that Israel is secure. But a few considerations. Number one, who is going to be replacing Yahya Sinwar at this point? Are they going to choose somebody from within the Gaza Strip, in which case it may just be a continuity of the actions that we have witnessed the last couple of months, or will the appointee come from someone residing outside? Khalil Haya, for example, is living in Doha currently. He has less political influence within the party, but has been privy to some of those mediation discussions that have been taking place. The second element to consider is the Israeli stance, which is, again, comes back to the comments that the Israeli Prime Minister put forward yesterday, saying the mission is yet to be completed, and the number one focus for the Israeli government right now is to secure the release of those hostages still being held in captivity. There are about 100 estimated to still be alive. And the second element is to completely disarm Hamas and pave the way for a new type of governance in the Gaza Strip. As of yet, Hamas have not indicated that they're willing to go down that route. And then in addition to that, you have all of the considerations, the regional considerations as well, with the Iran mission to the United Nations posting on X today that the spirit of the resistance will continue despite the death of Yahya Sinwar. So there's no sign yet from the region that there is going to be hope for a ceasefire deal crossing the line.
Jumana, appreciate the update. Thank you. Jumana Basechi there of Bloomberg out of Dubai. Let's continue the conversation. Joining us now is Norman Rule, former senior U.S. intelligence official. Norman, welcome back to the program, sir. I'm sure you heard those comments from Jumana. Let me ask you this. Do you think this could be an opportunity? Does it open the door to a ceasefire?
Good morning. It's too early to tell. As your correspondent correctly noted, we need to see who replaces Yahya Sinwar in Gaza. If it's his brother Mohammed, who is a bloodthirsty individual with a terrifically violent reputation, that tells you that Hamas will continue along its current track, and the Netanyahu administration will do the same. If, however, you have a leadership that is more willing to engage in compromise, then I think you're going to see an opportunity for pressure on the Netanyahu administration to do the same. The coming week should give us the answers we need to say where this problem is going.
Norm, President Biden yesterday said Antony Blinken will be going to the region, his 11th trip since the October 7th terrorist attack from Hamas on Israel. What does he need to do to potentially warm Bibi Netanyahu to this idea of potentially that opening for a ceasefire?
I'm not sure there's much the administration can do with Prime Minister Netanyahu. The Netanyahu administration, to include the security establishment, are committed to the eradication of Hamas as a military threat. Now, they've achieved eradicating Hamas and Hezbollah as strategic threats, but the violence in these areas continue, and the organizations can reform. I think it may be that Secretary of State Blinken's greatest success could lie in Doha, where if he is able to convince the Qataris and others to push Hamas to bring forth a more moderate leader, then you have the opportunity to then put that leverage against Prime Minister Netanyahu. It's also interesting that the visit by Secretary Blinken is taking place at a time when an Israeli attack on Iran is expected. Does this visit mean that the Biden administration believes the attack might be postponed, and therefore they're not sending the Secretary of State into an active war zone? Does it believe the attack will take place prior to the visit and come with no Iranian retaliation? I think the Iranian attack aspect is an interesting part of the Blinken trip as well.
Or maybe they're sending Secretary Blinken to buy time so there wouldn't be a retaliation. You mentioned eradication of Hamas and Hezbollah. Yahya Sinwar yesterday eradicated. Hassan Nasrallah, September 27th. Mohammed Diaf, the head of Hamas's military unit, was also in the summer, October 1st. And then Ismail Haniyeh was in Tehran in July. Who else is Israel targeting?
Well, I think Yahya Sinwar's brother, Mohammed, who has been targeted by Israel on multiple occasions in the past, is certainly on their list. And Israel's intelligence collection in Gaza and Lebanon will be focused on identifying those individuals who are demonstrating themselves to be commanders or organizers or focal points for militants in those two countries. And those attacks will continue for the foreseeable future.
How much weaker of a position is Iran right now, Norman? And I ask this as we await what kind of retaliation Israel will have. At the same time that we just got reports about the U.S. using bunker bombers on certain sites of military aspects for the Houthis. How much weaker is Iran right now?
Well, Iran has lost its external strategic punch. For years, if not decades, Iran has been able to communicate that any conflict with Iran would include powerful proxies who would launch a vast number of ballistic missiles and drones on Israel and the United States. And although these actors can be rebuilt, their arsenals replenished, they are not strategic threats in the region. They are long-term, persistent sources of conflict. But Israel's survival is not threatened by the Houthis, Hamas, or Hezbollah at this point. For Iran, therefore, this puts it in a weaker position. Although, again, Iran plays a long game and is looking at a future where it can restore the potency of these militant organizations.
Is this the reason why, Norman, some people think that this is actually a time where we could get some sort of ceasefire, could get some sort of deal, simply because Iran wants to play the long game and make sure that some of its proxies remain?
That's correct. If you are in Tehran, diplomacy is an avenue by which you can sustain these groups. A ceasefire, even for a few weeks, would allow these organizations to reorganize, to reestablish communications between commanders who have been literally under fire themselves and therefore unable to establish command and control over units in different parts of the country. Even a short-term ceasefire would improve Iran's power position in the region, and a long-term position, ceasefire rather, would allow the Quds force to just rebuild, replenish, restore these groups to their previous capacity.
Norman, just a final word from you. I just wonder how you're thinking about things and how they're coming together. Do you think Israel is following the same troubled path of the United States in Iraq? Is that the direction of travel here?
Yes, and in part what we're watching is what happens when a country perceives a strategic threat, but no political or military leadership is able to foresee too far into the future. And we don't know what's going to happen in Gaza. Is it conceivable the Gaza war is in its early stages? Could we see a post-Hamas organization spring up resembling Daesh or resembling or a new militant group? This is entirely possible. Absent a ceasefire, a two-state process, and some political solution in Lebanon, these possibilities remain, and the long-term nature of these conflicts is a strong possibility.
Norman, a clinic from you once again, sir. We appreciate it. Norman Rule there, the former senior U.S. intelligence official, with an update on stories elsewhere this morning. With your Bloomberg brief, it's Danny Berger. Hey, Danny.
Hey, John. Gold is on a record-breaking run. The precious metal topped $2,700 an ounce for the first time. Concerns over a wider war in the Middle East and U.S. election uncertainty has investors flocking to haven trades. Gold is about 2% higher on the week. Bank of America also noting this morning in their latest research note that gold posted its biggest inflows in 12 weeks. Good news for Apple overseas. Sales of the newest iPhone in China are up 20% in their first 3 weeks compared with the 2023 model. Analysts had warned that iPhone 16 might fare poorly in China given the absence of a local partner to power AI features. Beijing has barred foreign development AI models, meaning Apple may have to secure a local partner like Baidu. CVS is ousting CEO Karen Lynch and appointing David Joyner as its next chief executive. Joyner previously led CVS Caremark, its pharmacy benefit business. CVS had repeatedly missed its earnings targets, and that set off unrest among shareholders, spilling into public view in recent weeks. CVS also said that this year's third quarter results will fall short of Wall Street expectations. And that's your brief, John.
Danny, thank you. Let's turn now to the India Credit Forum in Mumbai, where Bloomberg News editor-in-chief, Deputy Editor-in-Chief, Reda Gregori, without a promotion there, is sitting down with the Reserve Bank of India Governor, Shakti Kanta Das. Let's take a listen.
You know, the number of institutions which are participating in the bond market, it's mainly the banks, the insurance companies, the mutual funds, and the pension funds, or the provident funds, as we call them. So we need more of institutional investors to come in. This is again one area where the foreign investors can come in. There is a certain cap provided, considering the prudential. There are prudential caps, that is ceilings prescribed for that, but it has not been utilized. Only 15% of the total space which is available for foreign investors to invest into the Indian bond market, only 15% of that has been utilized. So there is considerable scope to access the foreign funding, that is foreign investors into the corporate bond market.
So how do you get
and
the
finally,
other 85%?
just one more point. Finally, I think we also need to focus on, and we are focusing on, developing a robust secondary market for corporate bonds. I think that is something which we are working on, and that's something which will, I think, add a lot of momentum to the corporate bond market. Sorry, yeah.
Private credits is the buzzword at the moment. Everyone is trying to get into private credit.
That was the Reserve Bank of India Governor Shakti Kanta Das speaking with Bloomberg News Deputy Editor-in-Chief Reda Gregori in Mumbai. Up next on the program, a streaming success.
We had a plan to re-accelerate growth, and we delivered on that plan. You can see that in our 2024 financials. We expect to deliver 15% revenue growth and 6 percentage points of operating margin improvement and engagement.
That conversation up next.
about artificial intelligence? Is artificial intelligence going to enable you and others to say, we have enough information to know exactly what something is going to be worth in terms of insuring it or not?
Artificial intelligence is finding its way into our business in a variety of different factors. I think the first piece is getting much better insight into data, which allows us to make better decisions on underwriting. It's also a great opportunity to service business better in terms of like call centers and different ways of what's using robotics and other AI will be very helpful. But it is an emerging practice within the industry and one that is evolving very quickly. So it's also going to present risks that other companies, how they use it and how they use large language models and making sure the decision making is very sound. So it's complicated, but it definitely is benefiting the business today.
It's the world's second largest economy with a growing influence in global affairs. But geopolitical uncertainties, deflationary pressures, and questions about foreign investment linger. Bloomberg, the China Show, brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China. Bloomberg, the China Show. Weekdays around the world, right here on Bloomberg. Context changes everything.
Always on the heartbeat of the tech
spread across global markets.
The real-time data aspect is going to be important.
We're going to bring you expert analysis on that. Sure.
Don't miss Bloomberg's interview with the
Bloomberg loves earnings.
I know it's like your Super Bowl, right?
I can't wait. It's like opening presents in the morning.
All right, it will be exciting.
Nobody covers earnings like Bloomberg.
From New York City, welcome to the program. Equity futures on the S&P 500 up by 0.2%. Under surveillance this morning, a streaming success.
Looking into 2025, we're feeling really good about the business. We had a plan to re-accelerate growth, and we delivered on that plan. You can see that in our 2024 financials. We expect to deliver 15% revenue growth and 6 percentage points of operating margin improvement. And engagement, which we view as our best proxy for member happiness, because when people watch more, they stick around longer, so that's retention.
So here's the latest. Netflix surpassing Wall Street estimates on every single financial metric. The streaming company expected to keep up momentum with highly anticipated new releases throughout the fourth quarter. Citi's Jason Bazinet has a note of caution. We expect Netflix's stock to trade higher on a U.S. price hike announcement, but we would expect shares to eventually trade lower as investors hope for $25 in 2025 EPS are dashed. Jason joins us now for more. Jason, welcome to the program, sir. I just wonder from your perspective, what is the biggest tailwind to subscriber growth into year end?
Well, I think it's their ad tier. I mean, one of the interesting things about a year ago, we expected about 80 million ad tier net ads, which is about 25% of their sub base. What Netflix said on the call is about 50% of the gross ads that are coming onto the platform are selecting the ad tier. So consumers are responding to these very low price points, and that's what's fueling the net ads, both in the fourth quarter and next year.
Can I ask you how much pricing power you think they actually have then, with that in mind?
Pricing power on the service. Well, this is interesting. A lot of the bulls were really looking at the rivals that were taking up their streaming product and expected Netflix to take prices up. Netflix has always said that they only take pricing up when they earn it with engagement, and engagement is up really modestly, sort of 1% on average. And so they're taking some price hikes in selective markets. There's about 6 of them they've done, but a lot of the bulls were expecting a price hike in the U.S., and we didn't get an announcement of that. And I think it's a function of the fact that their just engagement is not really growing appreciably.
What do you think will actually drive that growth? Is it going to be market share? Is it sports?
Drive the growth in pricing power, or drive the growth in
subscribers, in subs?
Low price. That's the thing. I mean, I think the reality is they're pretty penetrated in the United States, right? And so I think that in a lot of these markets outside the United States where they have the ad tier, that's what's really doing it. It's a really good value if you're willing to take ads.
There's been this idea about a rebundling of media, and this idea that there are going to be a couple of winners and everybody's going to go to those, and then there's going to be some sort of package that people can get. Do you have a clear sense of who the winners are going to be in the streaming wars, especially as we get to the other side of the pandemic and some of those disruptions?
I'm not even sure it's a race. I mean, Netflix is so far out in front of everyone else that I think the market is has been for a while, thinking of Netflix as to video what, let's say Google is to search, right? It's winner take most.
Jason, when you look at this password crackdown, Netflix seems to be doing a very good job, but most analysts believe it is temporary. How much more do you think that has room to run?
Not much, not much. That started in the third quarter of last year, so we've lapped it now, and I think it's going to be a de minimis tailwind for them in the fourth quarter and into 25. Very small.
Geographically, where are they growing?
Well, I would say they're growing modestly everywhere. They did have a slight decline in Latin America this last quarter. That was because they took a price hike, which sort of just speaks to this sort of trade-off of if you take price up, you're going to lose subs. So this is why the ad tier is so important, is it allows them to get that low price and not have the sort of consumer backlash.
Jason, appreciate the input from you, sir. Jason Bazinet there of Citi, with Netflix up in a pre-market by something like 6% at the moment, following much better than expected earnings after the bell just yesterday.
Yeah, people thought that maybe they had reached their peak. Evidently, they haven't just yet. Although Jason kind of throwing some cold water on how much more they have to grow given the saturation and given how much crackdown they've already done on password sharing.
So far, so good, though, just in terms of some of these companies, right? Netflix okay, TSMC okay, Apple seemingly, based on that report overnight, okay as well.
To me, the clear message from earnings so far, whether it's the banks or whether it's some of these names that you mentioned, is that the consumer is still strong. Companies are delivering. They're expanding margins. This does not scream of some sort of weakness that leads to any kind of recession, which is the reason why you see that Goldilocks really baked into a lot of market valuations right now.
Stock still close to all-time highs on the S&P. Up next on the program, in the second hour of Bloomberg Surveillance, Anastasia Amoroso of iCapital will catch up with Libby Cantrell of PIMCO. We'll speak to Kit Jukes of SocGen and Oliver Chen of TD Cowen. All of that in the second hour of Bloomberg Surveillance. Just around the corner, equity futures on the S&P 500 at the moment firmer by a little more than 0.1%. The 10-year yield holding on to 4%, 4.09. Yields higher on the session by around about a basis point. From New York, this is Bloomberg.
Welcome to the world of decentralized finance.
With a surge in Bitcoin, you have crypto stocks also surging.
Bloomberg's covering all things crypto, the people.
This is a political attack, and we must hold our elected officials accountable.
The transactions.
Really a record-breaking moment.
Bitcoin is the exit strategy.
And the technology.
Awareness is going to grow, and these things grow the overall industry.
Crypto as an asset class is here to stay.
Bloomberg Crypto, only on Bloomberg.
Well, I think what's happening is we're starting to bring realism into the discussion. I mean, I think understanding the global energy system, the scale of that system, the important role that it plays in everybody's life around the world, and then thinking something that's been built over 150 years, trillions and trillions of dollars of investments that's playing such a critical role in the economies around the world, how you transition out of that system. And I would say transition from a higher carbon emission system to a lower carbon emission system. We started out with a very narrow solution set focused on wind and solar and EVs, and assumed or aspired that that would address the total set of the issues, and it doesn't. We need to be more realistic around, to Patrick's point, there are a lot of solutions that are going to be required. We should stay focused on the problem statement, which is emissions, and reducing those emissions, and less focused on exactly how to achieve that, and let every company, every sector, all technologies compete for the most cost-efficient way to reduce those emissions, and we will make progress much faster, which will mean making today's system more emissions efficient, while we introduce new systems that have lower emissions. And then with time, you will transition and we'll make progress.
From our studios in New York and San Francisco, our expert hosts have the data and analysis about the companies you know and the startups to watch, plus the interviews you don't want to miss. Watch Caroline Hyde and Ed Ludlow on Bloomberg Technology, the only only daily business show dedicated to tech, right in the middle of the... Context changes everything.
DOJ or other authorities.
Could face bigger challenges next.
It was going to keep bringing World Cup. This is a 3
as the economic picture.
covering the intersections of Hollywood, Silicon Valley, and beyond.
The countdown is on. Everything you need to get the edge at the end of the market day.
Big tech earnings kick off later this afternoon.
Gilead is coming out right now.
We have Take-Two numbers.
Back to the markets, right? Our bread and butter.
NVIDIA is one of the best stories in the tech space.
That actually matters a whole lot more.
It might shock some of your viewers.
You're watching The Close.
Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
We just have such a dynamic economy here in the United States.
Never very clear when you're coming into a transition, into a normalization, or whether you're getting into trouble.
We're in a data-driven world.
I don't think the data dependency story is real.
I'm not saying don't take data into account. I'm saying don't make it the main determinant, in fact, the only determinant of policy. That's where you make mistakes.
This is Bloomberg Surveillance with Jonathan Farrell, Lisa Abramowitz, and Anne-Marie Hordern.
The second hour of Bloomberg Surveillance starts right now with equity futures on the S&P 500 higher by 0.2%. On the Nasdaq 100 higher also by around about 0.4%. Supported by Apple, up by around about 1% in the pre-market. Better news from Counterpoint Research suggesting sales of the iPhone 16 doing better than expected, up 20% in sales for the third week compared to where we were in 2023. That's better news from Apple, supporting the Nasdaq story of 0.4. As for the S&P 500, heading towards a 6th weekly gain, the longest weekly streak going all the way back to December of last year. We've had a little bit of difficulty around the table over the last few weeks. I have to say, the difference between what the data's telling you and what some consumer-facing companies are telling you. Retail sales yesterday, better than expected. Procter & Gamble just a moment ago, it's a relatively softer quarter on the top line. That's the CFO just moments ago.
This is the reason why it's so hard to extrapolate into something like what you just mentioned with Apple's China's numbers. Essentially, the weak spot here was skincare in China for Procter & Gamble. You start to wonder how much this is a story of idiosyncratic success and failures rather than, say, a wholesale story of U.S. companies still being successful in China or consumer companies still having wholesale pricing power in the United States. This just shows it is a stock-specific market in a very unclear world.
And corporate America facing some very specific challenges as well. It's not just China, it's also the Middle East, sparking boycotts. They're two headwinds to this company.
Right, and the CFO is talking about that in an interview, saying war in the Middle East has sparked boycotts, eroded consumption, and then with China, of course, lower consumer confidence, which we've seen in a number of other companies as well. And then he goes on to say those two are really the headwinds here, but they're trying to say the core of the business is strong. But a lot of these corporate CEOs, the C-suite, are dealing with a lot of things that are really out of their control, and they're having to make do with it.
Some people making the point the core of this economy is still strong. Ellen Zentner of Morgan Stanley, Lisa, this morning's data, yesterday, retail sales, jobless claims, that data highlights the undeniable strength across the economy. So we're asking the question, what does it mean for Fed policy? Chair Powell is unlikely to be swayed from forging ahead with steady quarter-point moves. This note from Ian Lingen of BMO, I think, is really important here. There is a meaningful difference for the Fed between cutting and easing. The Fed is talking about recalibration, cutting back to what most people expect to be neutral. Easing is a very different conversation, and that's certainly not where we're at in this country.
This is a Federal Reserve that's being driven by how much inflation is coming down, not by necessarily perceived weakness. They will just see inflation continuing to come down and say, we just need to reduce our restrictiveness because we don't see a very hot labor market or inflationary pressures. What this is the opposite of a toxic brew, a Goldilocks glory, which essentially we're looking at right now, which is essentially the Fed that continues to cut. You have economic strength, particularly led by the consumer, and you have stimulus from around the world, in particular in China, and those three things come together to give you what you see right now.
I thought it was Goldilocks Nirvana. It's Goldilocks glory now.
You know, I'm going to just keep changing it because I can't really retrieve words. It's Friday.
Whatever sticks. Coming up this hour, Anastasia Amoroso of iCapital as traders pare back rate cut expectations. Libby Cantrell of PIMCO on how long it might take to call the election. And Kit Jukes of SocGen, with the risk of euro-dollar parity back on the table. We begin this hour with stocks steady and bond yields nearing the highest levels since July as investors pare back rate cut expectations following stronger than expected economic data. Anastasia Amoroso of iCapital writing some risks and unease, like the rebound in yields in US dollar, are still percolating in the background. But given the positive economic momentum, we stay invested. Anastasia joins us now for more. Anastasia, good morning.
Good morning.
What do you think is in the driving seat? Rate cut expectations or earnings? Which one is it?
I think it's a little bit of both. I mean, first of all, I think what's really, truly in the driving seat is the fact that the economy is resilient, and that has been on full display this week, actually for the last couple of weeks. You know, if you look at the Atlanta Fed GDP now, it's actually tracking 3.4%. If you look at the City Economic Surprise Index, which has been negative for the bulk of Q2 and maybe even, start of Q3, that's actually turned positive in the last couple of weeks. And then we've got retail sales that you pointed out, 0.7% core print. That's really strong too. So I think that's what's truly in the driving seat. But I also do think there's this extension to the rate cut story, which is the rate relief is being felt by the economy. It is being felt by companies across corporates and consumers, and that's starting to support the economy as well. And then, John, to your last point, financials earnings. I think that's been a really, really key development in the last week, and that's why we've seen financials break out to the upside.
The coast is clear for the financials. Let's talk about tech. ASML says there's a problem. TSMC says there's no problem. Is the coast clear for tech going into earnings?
Well, first of all, tech earnings have actually been revised higher, unlike the rest of the sectors that actually have been revised lower. I do think that the setup is constructive for technology. Look, if you look at ASML company, that's a particular technology that goes into semiconductor manufacturing, and you could see why there may be some delays in CapEx for those. But if you look at TSMC, that is the pulse of what is happening with semiconductor production right here, right now. And a couple of things that I heard from that report, first of all, is that AI demand is rock solid and is accelerating. But John, the really, really key thing for semiconductors was happening with non-AI demand. And that's where TSMC was also more constructive, saying that they do expect to pick up in things like smartphone chips and other things. So I think that sets it up nicely for semiconductors.
So there are these secular changes, which is the AI trend. And then there are the cyclical changes, which we see. You said something that I want to pick up on, that your earnings filter into increased economic activity. How is it that so many people say that corporate America did not feel the rate hikes, but that so quickly